The Power of Possibility, a podcast from SPS.
Hi, welcome again to The Power of Possibility, a podcast from SPS. I'm your host, Miguel, and in this episode we will talk about how customer experience is completely transforming the banking, financial services, and insurance sectors. A full-scale revolution that helps companies achieve better customer loyalty, attract new customers, and maintain a high standard of customer service in all their interactions. Automation has significantly transformed companies in banking and financial services. According to McKinsey, automation can handle up to 25% of tasks in banks, freeing up employees to concentrate on more critical activities. Moreover, financial institutions that adopt centralized AI models often transition from testing to full implementation more swiftly. In fact, around 70% achieve this milestone, compared to only 30% with decentralized models. This strategic use of automation not only cuts costs by more than a third, but also enhances competitiveness and operational efficiency. But how does it affect customer experience? And how this topic will become one of the main challenges for banks during the next years? To dive into this topic, we have here Michael Newberg, Head of Global Service Line for Banking, Financial Services and Insurance in SPS. Hi Michael, thanks for being here. I want to go straight to the first question. How has automation and AI improved customer experience in this sector? And what are the main benefits and challenges of it? Are there any specific trends or innovation in automation that companies are adapting to stay competitive?
A great question, Miguel. So AI will clearly have a huge positive impact, or already is having an impact, but I think it will accelerate over the next months and years for sure. So when talking about main trends or innovations that we're currently seeing, I think let's highlight 5 of them. Mm-hmm. So number 1 would be, in my eyes, chatbots and virtual assistants. You see things like, for example, DKB in Germany, who's currently implementing a new version out of that. Number 2 would be fraud detection. I think fraud is a key topic, especially after the crisis that we have seen and the innovations and as well the move of technology. So HSBC, Bank of America, they are having clear cases at the moment already with that regards. Number 3 would be credit risk evaluation and automated underwriting. For example, from a banking perspective, that would be Santander as an example. Number 4, in my eyes, is personalized financial advice. I think this is a clear topic coming stronger and stronger that we can see. And then more from a company perspective, for sure, the effects with regards to automation and back office processing. So how can AI be used, and is it used to automate back office processing to increase efficiencies and other things? And I think that leads us to the benefits that you ask for. So one thing is, from a customer perspective, for sure, the enhanced customer service 24/7 around the globe. I think that's what customers expect even more. Faster processing times, faster response times. That's, I think, which everyone from us as well expects from all services or products that we acquire. More personalized customer experience, so more tailored services. We will see then as well, on the other hand, what I mentioned already, operational efficiency and cost reduction then from a company perspective. I think this is crucial as well, to get much more efficient from different angles, either being it the current war of talents that we have and or the pressure and on prices and costs from BFSI companies. You ask as well about challenges, for sure that comes along with that. So data privacy concerns is definitely one of that, but as well the integration with the legacy systems. So in the BFSI industries, especially with the clear incumbents, we have huge and old legacy systems that need to interact and cope with the new processes and technologies. We have initial costs. We have a clear regulatory governance. I think as well AI, we will see more governance coming. So the first regulations are out, but more to come. And for sure as well a job topic, because what we see, this is a transformation which we are in. So it's not only about technology, it's about organization, process, and cultural change. So we will see a change in service processes, which as well requires different skills. So this is definitely a topic that is a challenge as well for several organizations. So it's always, in a nutshell, I think it's about the right mix, about people, process, and technology that we need in order to be efficient and successful in that journey.
And how can companies in these sectors use their communications channels to boost customer loyalty and satisfaction?
I think to increase loyalty and satisfaction is the personalization of communication, I think, is crucial. I think it's something where companies can as well differentiate from the market and create real great experience from the customer perspective. As well, gamification, I think lots of companies are working on that, especially via the app. So to embed and to attract the customer, the end customer, within the application or the service, and then out of that do kind of upselling and cross-selling. And at the end, it's as well about the right mix of omnichannel support. So we were having apps, chatbots, emails, call, video, perhaps even still physical mail where required regulatory-wise, or even to make a difference. So I think that's these are things that companies need to have a look at when talking about how to attract customers in the future.
You've just mentioned some strategies to boost customer loyalty. I want to ask you also, what are the most promising applications of AI in personal finance and wealth management?
So most promising is a good one. I think we see a huge variety at the moment about services and topics, and they're evaluating rather quickly. So there are definitely interesting ones, I would say, that we will see more about in the future. In general, I think we can distinguish between two main topics. On the one hand, these application services that increase the efficiency, for example, mitigating shortfalls on resources and talents and so on, and increasing efficiency within the company. So from that perspective, I think we are seeing things with regards to automating or automation of back office processing. For example, like SPS is using the technology in bank and insurance customers to classify documents, extract and interpret the relevant data, especially in areas of payment, processing, loans, or mortgages. But we see it as well. Other banks using that, like Deutsche Bank is doing the same in trade finance. So this is definitely one part. So doing the efficiency and increasing efficiency in back office operations. So we will see a lot of new developments in that domain, I'm pretty sure. The second part is more coming from an end user perspective. And there are as well a big variety of topics happening at the moment. The very interesting ones from my eyes are robo-advisors. There have been ones already a few years ago starting, but they are developing clearly with the new models of ChatGPT and so on. Predictive analytics for investments, advice, and portfolio management due to the ability to analyze now the huge data. This is definitely an interesting topic. Comes along with the automated financial planning and personalized budgeting topics that you could use then from a personal user perspective for your day-to-day financials. Virtual assistants is another one. So we are seeing lots of improved chatbots, partially as well via voice. So as an example, Bank of America has implemented Glass, which is an AI-empowered research and analysis platform that shows the clear innovation in that domain. So it combines market data and bank models and utilizing the machine learning techniques to identify the industry trends and then predict out of that the client demands. So this, on the one hand, helps to provide individual investment choices, but as well do further analysis and recommendations out of that. Another example going in the same direction is Kairos. Santander implemented for their CRB clients. So there you see this is really a topic. On the virtual assistants, I think I mentioned it right in the introduction at the beginning. DKB in Germany is now launching a new chatbot with AI. So I'm pretty sure we will see a lot of these kind of new developments in this direction or these directions over the next months. So definitely lots of very interesting and promising things, as you mentioned or asked. And with regards to benefits, I think clear is the accessibility to financial advice, cost reduction, the personalized financial insights, improved decision makings, and ideally then enhanced portfolio performance if you look at the portfolio management. So everyone wants to beat the MSCI Global, or that's always the goal. And I think with the AI we have much more power to succeed.
Okay, and knowing all this, how can AI-driven insights help BFSI companies to tailor financial products to individual customer needs?
I think this is a really important topic at the moment and highly discussed. I think this is the so-called hyper-personalization, which is out on the market at the moment. So some examples that are going in the same direction I mentioned early on already with regards to portfolio management. But besides that, BFSI companies are experimenting at the moment with tailored loan offerings or personalized insurance policies. So definitely something that is going and moving into that direction at the moment. I mean, there's a huge set and variety of data that can be used, that is used. But it's very important that for BFSI companies as well, that this data is aligned holistically, and as well a joint data source and data pool is used. As I mentioned earlier on, partially we struggle with multiple legacy systems, partially even having their own data pools. And we have big organizations, partially still working in silos, looking at corporate, at private customers, looking for market domain, or even segmented by services. So this is definitely a challenge that needs to be overcome, organizational-wise, but as well IT-wise. So just to make it very clear or crisp as an example, imagine you get a personalized loan offering while you are already at the end not capable anymore to pay, and you're in the collections department already of a bank. So it probably is not the best from a customer and a banking perspective to offer you a new loan. So we need to combine the data sets in order to avoid such things happening.
You know, there's also another topic that is usually included in these discussions, which is the potential risk. What are the potential risks associated with AI-driven financial services, and how can they be mitigated?
So I think for financial services, the main risks still account that we see in general for the AI topic, and that is broadly discussed at the market, I think. So it's about algorithmic bias, hallucination of the software, data privacy, definitely a topic. A little bit depending on the country, and some countries more discussed than others. They're more open to that. Lack of transparency and cybersecurity threats. I think these are definitely a few topics. And perhaps taking as well examples that have been discussed openly in the community, like Air Canada, who was held liable for having a chatbot giving bad advice. Chevrolet introduced a chatbot who was then attacked and tricked by different users. So on the one hand, selling a car for $1, on the other hand, recommending Teslas, which is for sure not the intention of Chevrolet at that point of time. And so if you then think about financial services, I mean, this is even more sensitive data. You can imagine how a failure or misuse in that regards would lead to high damage. On the one hand, reputational wise, on the other hand, finance wise. So as a mitigation, I think it's crucial to be cautious, to have sufficient and supervised training, and testing, so not to move too quickly, to be sure before opening such new services to the broad audience. Having clear audits on the AI systems, having actions and measures with regards to data privacy and compliance, as well when using the data, ensuring that you have the acknowledgement from the customer to use the data, have transparent models with regards to AI, have always the human oversight, and of course all the robust cybersecurity and IT measures, plus clear guidelines and regulations and policies internally, how to use and how to move to next stages. I think these are crucial measures in order to mitigate shortfalls in the direction we mentioned earlier on.
The future of banking presents some levels of uncertainty, as new players such as big tech companies are entering the field. How can banks face these challenges?
Good question. And I think a few years ago when the fintechs rise on the market, everyone was having a fear, they will displace the banks or the insurance companies. But reality shows this has not happened. Some fintechs even have disappeared. So, but what definitely they have done and what has been shown is that innovation and speed has accelerated clearly with that regard. So bringing new services, new way of thinking, new technologies, different operating models and products in the market. So I think what is definitely important with regards to these challenges that you mentioned by the new players coming in the market, that you need to emphasize the digital transformation and the adoption of these technologies. You need, as we mentioned early on, a transformation, a different culture within the organization. So you need to foster innovation. You need to be agile, quick, strengthen partnerships, for example, with fintechs, to stay competitive. I think important. You need to focus on the customer experience. What you mentioned earlier on in one of your questions, to get personal advice. So because I think that's where you will get and attract the customers. And especially banks, but as well insurance companies, have a great foundation of trust. And I think that's a difference to some newcomers coming to the market. And customers are still seeking as well this trust, because financial services is a very sensitive business, and it's all about trust. So use it wisely, choose the right strategy, and as well the strategic partners. I think doing everything on your own will not work out. So you need to do and have partnerships, either being it with fintechs, new players, or even service providers who've specialized on some of the topics. So at the end, it's a rightful combination of a human service process and an AI automation, which is powerful and key to success in my eyes.
I guess it's good to know how these situations were solved in the past. How did the last financial crisis change BFSI companies?
Yeah, so I think the biggest change definitely is with regards to regulation. So we've seen over the last years increasing regulation, and all companies partially suffer from that because it has a huge impact and efforts to implement these kind of things. And this partially still moves on. I mean, now it's about AI regulation, so things are changing. But so from a risk management perspective, all the frameworks, more conservative lending, investment strategies, focus on liquidity and capital, these are things that we've seen after the crisis, and I think which is for sure important to avoid future ones. So stress testing and all these things are other topics to be mentioned. So that's definitely a topic. So regulation and risk management has clearly increased across all domains.
You know, facing these kind of situations also require a high performance culture. How do leaders play a crucial role in this transformative path?
It is, as you rightfully say, it is crucial, and they play an extremely important role. And we partially covered some of the things early on. So I think it's a transformation which we're in. So we need the organization to change. We need, and change is done by the leaders. It must come from the top. So leaders must foster the culture of continuous improvement, innovation, and development. As well, failure culture, I think, is important. Yeah? So if you try out new things, you're going to fail. That's pretty normal. But out of failure, you can learn and you can improve. And this is as well a mind change in some of the organizations. I think we have seen lots of developments, improvements in companies over the last years with that regards already. But that's definitely an important one. So encourage collaboration, open communication within the teams. I said we need to break up the silos we mentioned early on, especially when it comes to data pools, when it comes to processes. You need to lead by example in embracing the change and innovation across the whole services. You need to think end to end. As I said, break up the silos, and you need to come from a customer perspective, looking at the end-to-end service. And this culture can only be embedded in the organization by the leaders, embracing and motivating and recognizing and awarding these kind of things. So recognition and awards for performers, high performers, motivation and retaining talent. You mentioned the war of talent due to the topics. Definitely an important topic. So we do not need the specialists. We need as well the leaders to drive this transformation and change.
And what is needed to bring more innovation to BFSI companies?
Yeah. So on the one hand, you can for sure, the companies are doing that, invest in research and development and these new technologies, having innovation labs, team labs, and experimenting. That's what I said with failure. Yeah, just have things, have pilots tested, encouraging the mindset as well with regards to risk taking, experimenting, and the failure. But as well, what we mentioned early on, partnering. So the evolution is so quick, and so topics are evolving so fast and specialized partially that I think when you try to do everything on your own, you're going to fail, or this will be at least a very hard challenge and might take quite a lot of time, which you do not have because there will be other ones in the market being much, much quicker. So you need as well to partner with startups, fintechs, or experienced providers, as you mentioned on, to split the topics and the areas of focus. So to achieve the excellence on the whole value chain. And of course, last but not least, and even the most important topics for sure, involve the customer, look at the end-to-end process, always think from their perspective, and involve them and as well their feedback, and things to focus or where to improve further. So I think this is definitely a key in bringing more to success for further innovation in the companies.
It is time for the last question. This is going to be hard, but in your opinion, what do you imagine financial companies will look like a few years from now? And how are banks going to change their products?
Interesting question. So I do not have the magic balls. So I do not know, but I from the trends we are seeing clearly that banking and as well insurance services will be much more interactively embedded in the day-to-day life. So being it by the digital channels like apps, virtual assistants. I think Alexa is now old, but I think Apple is now implementing the new AI on their smartphones. And I bet these a few years further, the services you get from as a customer from your bank, from your insurance company, will be much more embedded. So the interaction and adoption will take a significantly bigger part. So that means we will see more adoption of open banking and integrated and seamless services around apps. Banks or insurance companies are still trying to implement one app where you have your whole life. So the Chinese colleagues are, I think, having with the one platform doing where you can do nearly everything from spending money, doing transfers, buying products, all in one app. I'm not sure if you're going to reach that here in Europe, for example, but definitely we will see a move into that direction. So we will have more digital communication interactions in that domain. Also, I personally believe that the human action will always play a crucial and important role. As I mentioned, it's about trust, especially in that business, especially when it comes to complex services, advice, other topics. It could be as video. I think branches, we will see definitely a reduction. The trend is going on. We will see less branches in a few years, I'm pretty sure. But what we see on the other hand as well, for example, when you interact with chatbots today, 50% of the chat has been started with the bot is as of today routed then to a personal agent at the end. So people are still seeking that. The number might reduce, but it will never be gone. So I think looking at the bank in a few years' time, what you ask, more digital communication, but in different channels, but as well as still personal interaction. So greater use of technologies, I'm sure we will see that in combination as well with new products like the tokenization on blockchain, where you can trade in other assets like cars, art, or whatever. So we will see more of that to come as well. And as finally and outlined throughout the whole podcast, I think we will see much more personalized financial products based on and tailored on your personal needs, based on the artificial intelligence and the powerful data we have.
I'm afraid that this episode is coming to an end. Thanks, Michael, for your help, and hope to see you soon.
Yeah, it was a really pleasure, Miguel. Nice for being here, and looking forward to speaking to you soon and talking about other topics. Thanks a lot.
Thanks. And for all of you listening, remember that if you enjoyed, you can subscribe to this podcast so you can be notified of the next episodes. Thanks for all. See you soon.
The Power of Possibility, a podcast from SPS.
Hi, welcome again to a new episode of The Power of Possibility, a podcast from SPS. In this episode, we're diving into how digital transformation is taking ESG practices to the next level. But this time, we're bringing insights from other experts. That's why today we want to share a recent interview from the Sustainability Voices podcast. You'll hear the voices of Christina Banahan, Global ESG Director at SPS, and Patrick Obeid, CEO and founder of ESG Flow, a software that leverages AI to automate ESG data collection and transform it into audit-ready metrics. In this episode, they discuss the intersection of digital efficiency and sustainability, and explore how technologies like AI or cloud computing can drive environmental progress and operational excellence. Give it a listen. You'll hear some great insights.
Christina, it's great to have you with us.
Hi, Patrick. Thank you so much for inviting me to the podcast. It's truly an honor to be here today, especially to delve into a topic as crucial as digital efficiency and its impact on sustainability. Through the work we do at SPS, we aim to demonstrate how businesses can adapt services and be a force for good. So for me, the intersection of technology and environmental stewardship is a subject that's really close to my heart, as I know it is for you too. And I'm always as keen to learn and understand how others navigate this landscape as I am too, sharing our own learnings, challenges and successes in this area. So in the hopes that it inspires others to embark and improve on their own sustainability journey. So once again, thank you for the opportunity. I'm really looking forward to our discussion.
Yeah, I'm so grateful to have you and I'm excited to learn from you today. I would say the first question that comes to mind is, could you start by explaining what digital efficiency means at SPS and why it's a priority today?
Yeah, digital efficiency refers to the optimization of digital processes, systems, and tools to achieve maximum productivity, performance, cost effectiveness, all with minimal waste of resources. So it involves taking structured and unstructured data and using technologies such as Gen AI to streamline operations, automate repetitive tasks, improve communication, enhance data security management, and mitigate risk. And by leveraging digital technologies, organizations can reduce operational costs, improve digital decision making with better data analytics. All these efficiencies ultimately enhance customer experience and drive innovations. So prior to COVID-19 pandemic, I think digital transformation efforts typically focused on integrating technology solutions into specific functions or customer-facing areas. And although digital business transformation was recognized as a strategic goal, it was often a secondary consideration triggered by the immediate needs within an isolated section of the organization. However, I think the pandemic really catapulted digital transformation to the forefront of corporate strategy and the global business agenda. So as lockdowns forced the world to operate remotely, both businesses and consumers swiftly adapted digital solutions, leading to an unprecedented surge in online transactions and services. And the urgency to adapt to remote working environments enabled companies to implement these digital solutions much, much faster than they would have done before, confronting existential challenges and fast-tracking decision-making and prioritizing digital transformation as a key strategic objective. You know, we've been offering digital mail solutions for a number of years, but as a result of the pandemic, the timelines for companies adopting these digital projects shortened considerably. So primarily due to the expedited decision-making process. Now, as you know, digital transformation has become a mantra for many companies, whether they're big or small. And irrespective of the size, the journey involves automating workflows, eliminating time-consuming manual tasks, incorporating intelligence, and tapping into the infinite possibilities offered by this wealth of data. So the ability to harness insight and drive action from data is the key to unlocking the limitless opportunities of digital efficiency or transformation. And it's actually really here to stay. I was looking at a report. So according to the IDC, global spending on digital transformation is projected to reach 2.8 trillion by 2025. So that's more than doubling the investment in 2020. So digital efficiency is crucial for businesses to remain competitive in what is a rapidly evolving landscape.
See, that's very energizing, and it seems like you're in the right space at the right time, and it's a massive industry that is growing super fast, that has the potential to really transform how we do business forever. I loved your points around harnessing the data to drive better decisions as well. I think we're only starting to scratch the surface. The more historical data you have as a business, the clearer your decision-making processes and the better decisions you make. And I think, we live in a world as well where having that data could allow you to look at things in a more 360-degree way and drive more responsible decision-making as well. And I'm excited to talk about that as well throughout the episode today. Thank you for that. I would love to hear an example of a digital efficiency initiative that you've implemented for clients and its direct impact.
Yeah, well, the one that comes immediately to mind is the hybrid workplace solution. So that includes digital mail, virtual reception, desk bookings, hospitality bookings, and smart lockers. And these are all available on one platform. So it creates a connected office that fosters better collaboration and support, regardless of if the team is working on-site or remotely. And hybrid and remote working models are now increasingly becoming the standard, offering numerous benefits for both employees and employers alike. So for employees, they really appreciate the flexibility that hybrid models offer, allowing them to balance work with personal commitments. And this balance leads to reduced stress and enhanced overall well-being. And working from home also removes the need for that daily commute. So that saves time and it saves travel costs. And the time saved can also be devoted to personal pursuits, so further improving that work-life balance. And many find, not all, but many do find that they are more productive at home, away from the typical office distractions and interruptions. So this environment can foster a higher quality of work and more effective or efficient time use. And for employers, there's cost savings. With the reduced in-office presence, companies can save money on real estate and on utilities and other office expenses. And hybrid and remote working enable companies to recruit talent from a much broader geographical area. So not just those within a commuting distance. And therefore, that helps organizations find the best candidates. And offering flexible working arrangements has seemed to boost employee satisfaction and loyalty, and thereby lowering turnover rates and maintaining a stable, experienced workforce. As organizations, I think, navigate the new norms of work, it's clear that the integration of digital technologies and the adoption of this flexible working model, they're not just trends, they're essential strategies for future-proofing organizations.
Absolutely. I can still remember the first day of COVID 4 years ago, and I was really struggling. Before that, I've never taken a Zoom call or a video call. I think we would take conference calls, and the first day I logged in, I think it was like March, probably around this week, 4 years ago, and I took a video call without me being on video because I've never seen myself on a video call before. So it's insane to me how quickly we as humans adapt, and I love hearing all the amazing things you're doing at SPS, because not only does it align with how the world is moving and you're driving that change, but also it has a ton of positive impact. So throughout this episode, I'm excited to unlock how all these digital initiatives are driving sustainability goals and driving better economic outcomes for cities, countries, and the world. One question that comes to mind is, how does digital efficiency tie into a company's overall sustainability goals?
Yeah, that's a good question. I think it's crucial for achieving both our own sustainability goals and that of our clients through various impactful measures. As I previously mentioned, digital tools facilitate the adoption of remote and hybrid work arrangements, and this directly contributes to a reduction in carbon emissions linked to commuting and to business travel. The shift towards less commuting not only decreases emissions and improves air quality, but it also contributes to a reduced congestion and less strain on public transport systems, particularly around certain times of the day. And I know that there have been concerns raised about the impact on city trade. Remote working, I think, does encourage local spending and potentially revitalising local economies. In addition, I think digitization and cloud-based technology means that organizations can significantly cut down on the use of physical resources like paper and ink and the transportation required for delivery. This approach not only saves natural resources, but it also lessens the waste production and significantly reduces the environmental impact. And while there is still a persistently high demand for paper, we have implemented various initiatives to mitigate the impact that this has on resources for our clients. For example, we have an omni-channel customer communications, which enables recipients to select their preferred communication channel. So by managing activities across all available channels, organizations can ensure a seamless and integrated customer experience. This approach not only caters to diverse preferences, but it also enhances engagement by meeting the customers where they are. And I think that's important.
I loved your last point, Christina, about meeting the customers where they are. And I also loved your earlier point about automating existing workflows. What I love about you're doing is you're truly disrupting the world, but you're not really trying to change how we do it, but you're trying to adapt to human behavior and trying to make it more efficient, more effective, more digital, more automated, in some cases even more productive. And I love that. In a way, you remind me a lot of what we do at ESG Flow as well, and trying to leverage technology to be able to automate existing workflows so we can give time back to humans to be more creative, to be able to drive decision making. Because if you're a site manager or an office manager spending your day dealing with documents and paperwork, and you don't have time to think about how to make something faster, how to drive decisions, how to make the entire office just more pleasant to work in. And I think what you're doing is giving people time back to focus on what matters, which is being more creative, driving better decisions, which is very honorable and very energizing. I would love to talk about the how. I think we've spent a lot of time talking about the what and the why, and I'm sure our audience are very curious to hear about the how and some of the challenges that come with implementing these solutions. So the question that comes to mind next is, implementing digital solutions often comes with challenges. What hurdles have you faced with your clients and how have you addressed them?
Yeah, it's another really good question, Patrick. So I think before COVID-19, I think the challenges associated with digital transformation were more pronounced. So the pandemic served as a catalyst, compelling companies to swiftly adapt. So there was less resistance to change, both from the employees and from the employers who were accustomed to traditional work methods. So nonetheless, addressing these concerns involves change management strategies such as training, workshops, clear communication on the benefits of digital adoption. And the human aspect of digital transformation is critical. So it's about managing the impact of new technologies on the workforce and emphasizing leadership, culture, and employee engagement. And also, with the increased reliance on digital solutions comes a heightened risk of cyber threats. So to mitigate these risks, we've bolstered our cybersecurity measures through secure cloud services and data encryption and security audits. Data protection and privacy, they're really complex issues, particularly on a global scale. So we've responded by implementing strict data governance policies, conducting privacy impact assessments, and ensuring compliance with all the relevant regulations. The introduction of advanced digital technology as well also highlights sometimes the skills gap within the workforce. So we've addressed these by promoting ongoing education and professional development, ensuring employees enhance their digital competencies. And another one which is big is the integrating new digital technology solutions with existing infrastructure poses its own set of challenges, especially when dealing with legacy systems. So we've tackled this by choosing compatible solutions and working closely with organizations, IT and compliance departments. And as digital solutions automate more processes, maintaining personal connections with customers can become more challenging. So I think it's essential for organizations to view these solutions as tools to augment rather than replace customer interaction, focusing on personalization and upholding high customer service standard. I think historically, many leaders view digital transformation with investment into new technology. However, this perspective often, I think, overlooks the essence of transformation, which is about developing the business, the culture, and the operations holistically. Every business must evolve, and becoming data-driven is essential in an organization's evolution. True transformation really does require a vision on where the organization must compete over a multi-year horizon. So it's crucial to understand that digital transformation transcends technology. It's about leveraging technology to revolutionize business models and operations. And the technology itself is merely the enabler that helps execute this transformation. But in reality, the digital landscape is very complex, and keeping pace with this rapidly changing landscape can be really challenging, with new digital innovations continually promising to revolutionize the workplace. So organizations who understand the digital transformation fundamentals, so identifying key technologies and formulating strategies for effective implementation and aligning digital initiatives with the company's broader objectives, ensures that technology investments yield real, tangible benefits. So I suppose to sum it up, successful transformation requires not just technology, but a strategic approach, the right organizational culture, effective change management, innovation, and a clear understanding of where to upskill and where new talent or new skills may be needed.
Thank you, Christina. I loved your point around augmenting existing processes or human activities versus replacing them. And I remember when I was working back at Bain & Company, we were advising a insurance company in the United States, and one of the processes that we implemented is using technology to enable humans to be more empathetic. Like, you can't replace
Wow.
human empathy, at least not in today's technology, and I don't envision that happening in the next few years. But helping humans in a busy world full of noise tap into their empathy is something that we we were able to do, and it reminded me of that example. So really energizing again and exciting to see all the amazing things you're doing. I actually would love to hear about an example from you. Can you talk about an example of a digital efficiency initiative that you've implemented for clients and its direct impact?
Yeah, digital efficiency, it takes commitment. So we've been doing digital transformation for over 20 years, and we have seen a lot of companies struggle. It's often seen as an operational improvement or improving cost effectiveness, but should really be viewed as as transformative, and while also improving sustainability. So I can give you a couple of examples, but the reason for introducing the solutions were different. So we have a team at the high-tech campus in Eindhoven, a fantastic campus. It has over 235 high-tech companies and employees, 12,000 people, including world-class innovators, researchers, and engineers. And collectively, they're on a mission to become the most sustainable campus in Europe. So since 2012, SPS, we've been a key contributor in that quest. So we revolutionized the traditional mailroom and logistics services, transforming them into a hybrid workplace solution. So one of the groundbreaking implementation was a self-learning voice-controlled sorting system, mail sorting system. And this system, alongside a meticulous tracking system for inbound goods and online booking platform for all shipment, marked a real sustainable change for the campus logistics. But the campus actually went a stage further by digitizing business documents such as patents and invoices, which would have been posted or shipped to over 20 countries around the world. And we've introduced the carbon neutral last mile delivery using fully electric equipment. But furthermore, we're working and supporting projects like the Urban Mobility Hub for drones. So the overall results on this particular project is that we are moving over 250,000 letters and parcels annually with 22 smart locker hubs on site. And this has resulted in reducing shipping costs by over 20%. And we're cutting delivery time significantly from 24 hours to less than 8 hours. And this is all on a campus that prides itself on carbon neutral delivery. We have another client, and they're a leading global integrated payments company, and they have over 60,000 employees. Now, they've been a client with ours for a very long time, since 1997, and we provide them with a range of services, including office logistics, digital mail, and secure check printing across EMEA and APAC. And the global pandemic for them really accelerated the innovation and the shift towards remote and later hybrid work environment. So initially, we adopted an interim solution using an MFD for scanning, but this evolved into a comprehensive digital solution, digital mail solution. So the service expansion began in the UK, and it really quickly expanded across Europe and Asia. And in fact, we went live in 5 countries across APAC, launched simultaneously after a 6-week implementation, which really does demonstrate how quickly solutions can be adapted and scaled. And we now deliver digital mail for this company to over 14 countries, and we make 830,000 documents accessible to employees working remotely. And this reduction on emissions from the solution alone is substantial when you take in all the factors that we previously mentioned into consideration, such as couriers, the commute, and in addition, flexible working arrangements is now offered to their employees. And there's a final example that I can think of is that we work with a client who's a global market leader in industrial automation and software, and they have 320,000 employees. And we've partnered with them since 2012, and we have continuously evolved our enterprise workplace portfolio, transitioning from, again, the traditional office logistics to encompassing services for a hybrid workforce. And initially, the client was relying on a dual provider strategy for their 2 main locations, which had about 80% of their employees. And the client's aim was to enhance the employee's experience. So that's the view they were taking. So they wanted to enhance their employee experience through digital services and aligning with their cultural and their vision in what they termed new work. So when SPS introduced the hybrid work services, such as the hybrid mail and the smart lockers in 2022, it led to the expansion to all their German locations, so making SPS the single preferred supplier for enterprise workplace solutions. But the significant point here is that the initiative resulted in increased employee satisfaction. So the initial drivers, I think, can be a reduction in CO2, increased employee satisfaction, or improved efficiency. But the results can have a positive impact on all of these areas.
Christina, this is, again, very inspiring. I was reflecting on a framework that I always use, which is, at the end of the day, businesses buy services for three reasons, or one of three reasons. One is to reduce cost, and one is to reduce risk, and one is to increase revenue or expand EBITDA. It seems to me that, at least in today's world, and it seems to me you're touching upon all these three with the power of your digital solutions. Yeah. Obviously, I envision a world where we live, where businesses are also optimizing for sustainability as well. And my hope is that sustainability drive cost reduction, risk reduction, and an increase in revenue. It seems like SPS, you found that secret formula that allows you to get all four. If you were to take a step back, I would love to hear from you about how you measure success of your digital efficiency projects in terms of sustainability.
Yeah, there's actually a number of ways that you can do it. So firstly, you can assess the environmental impact by quantifying the reduction of CO2. So this includes savings from decreased business travel and commuting that we mentioned earlier, as well as the reduction in resources such as your paper, ink, couriers, and postage, all measured in metric tons of CO2 saved. In addition to that, you can monitor your waste reduction. Operational efficiency is another crucial measure. So we can track things like process completion times, labour hours saved, and reduced error rates, which obviously have an impact then on customer satisfaction. The impact on the workforce is also a significant consideration. So organisations can determine employee engagement with digital tools and their perception of the company's sustainability efforts through feedback mechanisms or surveys. And assessing their satisfaction with the availability of hybrid or remote working options can also be included. And HR can analyse trends such as attrition or application rates compared to previous years. A vital one is customer satisfaction. So that provides really invaluable insights into the success of digital initiatives. So feedback on user experience and their perceived value of sustainability efforts helps organizations understand their effectiveness of the projects from the customer's perspective. And by integrating these metrics, organizations can gain a really comprehensive view of the impact of digital efficiency projects on sustainability. This multifaceted assessment, I think, really helps identify where organizations are not only doing well, but it can also highlight opportunities for further advancement.
I'm curious to hear from you if you can think of any metrics or KPIs that you can share with the audience to be able to highlight the progress made in the last few years.
Yeah, sure. So specific KPIs, they really do offer a tangible sense of the progress that's being made. So we, for example, set our own carbon reduction targets, and we also help clients reach their own reduction targets as a result of introducing digital initiatives. So once an organisation has measured its CO2 and resources, you can set specific reduction KPIs relating to quantify the reduction in physical resources, paper and ink, for example, which can be tracked through volumes purchased. Waste reduction can also be quantified, and therefore reduction targets and KPIs introduced. We also monitor improvement in operational processes that I mentioned before, such as the increased process completion speed, labour hours saved, and reduced error rates, all of which contribute to a leaner and more sustainable operation. And the documents and the information that we hold is very sensitive. So we put an awful lot of emphasis on the highest standards of compliance, cybersecurity, and data protection. So, for example, our KPIs we have are zero compliance breaches on anti-corruption, antitrust, and anti-money laundering. And we've also set KPIs that means we successfully recertify in all our relevant ISOs, for example. And when it comes to IT security awareness, our KPI is that we train all users on a yearly basis. We also set KPIs for better than market security scores in the likes of Microsoft and Tenable. We have set KPIs of 100% of all new employees are trained in compliance and data protection in the first 6 months of joining. And when it comes to it's critical, the business reliance and risk management, we have set a KPI on all our service level agreements with our clients, and we conduct business continuity plan exercises in all of our regions. So that not only makes us more sustainable, but it makes our clients more sustainable because they're assured of the quality and the security of the data that we process on their behalf. But I think two really critical key performance indicators, certainly for us, and I think for all organizations, is around customer satisfaction. So for us, that's our net promoter score, which is world class, and our contract renewal rate. And we've set targets within our employee satisfaction survey as well, and we always act upon the feedback that we get from them. So for any organization, I think it's really important for them to gauge both the employee and the customer satisfaction levels and their perception and feedback of the company's sustainability efforts.
That's amazing, Christina. I love seeing how passionate you are about this, and it's very contagious. I know you are, as the director of ESG at SPS, you're basically at the cusp of two big trends or two big global transformations that the world is going through right now. Like one, as you said, is the digital transformation, and the other one is the sustainability transformation. And it seems like you're sitting at the intersection of both. Looking forward, how do you see digital efficiency evolving in the context of ESG?
Yeah, and I think this is another area where ESG flow to are at the forefront of this. So I suppose as we look towards the future, digital efficiency, it's poised to play a transformative role within the context of ESG. The drive towards digital transformation is fueled by evolving customer expectations and a regulatory landscape increasingly focused on environmental impact, data protection, and human rights. In addition, the competitive landscape is further accelerating this push, making innovation in digital technologies not just a matter of survival, but a strategic imperative to unlock new possibilities and values. So you have technologies such as, and I know we've discussed them before, cloud computing, machine learning, Gen AI, and blockchain. They're all at the heart of this transformation, offering businesses the tools to become more efficient, more adaptable, and importantly, more sustainable. So digital solutions can enable smarter environmental monitoring and reporting, leading to more effective and transparent practices. It reduces energy consumption and carbon footprints through scalable solutions that lessen the need for physical infrastructure, enhancing supply chain transparency through blockchain, fostering responsible and ethical sourcing and reducing environmental and social risks. And digital efficiency also strengthens governance practices by promoting transparency, accountability, and ethical decision-making. And the space that you're in, this huge potential for technology to streamline ESG reporting and improve accuracy with AI and machine learning. I think, however, it's also worth highlighting the need to address the challenges posed by bias in Gen AI models. So it's crucial for organizations leveraging these new technologies. Awareness and cautious application are key to navigating these limitations. So strategies for mitigating bias include diverse data sourcing, continuous model monitoring, and applying ethical guidelines to ensure that AI-driven decisions are fair and transparent and accountable. And I think by proactively managing these hurdles, organizations can really harness the potential while also minimizing risk.
Tina, I loved your examples, and I totally agree with the bias elimination and making sure that you're leveraging those tools, accurately and precisely. And with the speed at which we're moving, I think it's important to note that these things happen sometimes, and being aware of them is extremely important. Christina, I'm curious to hear, what role do you think technology will play in the future of sustainable business practices today?
I think technology stands as the cornerstone in the future of sustainable business practices, and its role extends beyond operational efficiency to fundamentally transforming how business meet their ESG goals. Technology facilitates a shift towards more sustainable, sociable, responsible socially responsible and economically viable practices across various domains. So informing decision-making with advanced data analytics, helping balance profitability with sustainability, as we discussed earlier, advancing energy efficiency through innovations in renewable energy and optimized energy consumption in building and transportation, supporting a circular economy via digital platforms that manage product life cycles and encouraging sustainable consumption and production. So the rise of digital communication tools has made remote working far more feasible. And I think as these technologies continue to evolve, they will further support flexible work arrangements. Innovating sustainable products, so leveraging advancements in material science to create biodegradable materials and products designed for recycling. Technology will also enhance transparency and accountability through better data collection, analysis, and reporting. Digital efficiency can provide verifiable and immutable records of a company's environmental and social impacts, which is making it easier for businesses to report on sustainability metrics accurately and transparently, which I know ESG Flow are certainly at the forefront of. So I think in essence, technology is not just a facilitator, but a transformative force in an evolution of sustainable business practices. It provides the essential tools and solutions for tackling environmental challenges, enhancing social well-being, and achieving economic growth in a manner that is responsible and sustainable for the long term.
Christina, this is great. I feel like we are at the cusp of a digital revolution, and I have a feeling I'm going to be listening to this episode in 10 years, and it's like you're telling me we're riding horses, but we're switching to automobiles right now. So I feel like we're exactly at that point in history. So thank you for all the amazing thoughts. I think as we wrap up, Christina, what final thoughts would you like to leave our listeners with regarding the intersection of digital efficiency and sustainability?
I would like to emphasize the intersection of digital efficiency and sustainability represents a significant opportunity for organizations to unlock the power of possibility for businesses. The journey towards sustainability is not just an environmental or social imperative, but it's a strategic business opportunity. And digital efficiency really serves as the bridge, helping us to achieve our sustainability goals, while also driving innovation and competitiveness and economic growth. I think it's important to recognize that while technology provides the tools and solutions to address many of our sustainability challenges, the key to success lies in how we implement and integrate these technologies into our daily operations, our strategies, and our culture. Moreover, I think collaboration both internally in an organization, but also with all other organizations, plays a critical role in this journey. Sharing knowledge, resources, and best practices can accelerate progress towards our common goals. So I would encourage organizations to embrace innovation and remain adaptable. The landscape of technology and sustainability is rapidly evolving, and it's presenting new challenges, but it's also presenting opportunities for organizations. So I think we need to remember that this pursuit of digital efficiency and sustainability is not just about mitigating risk or complying with regulations, although they are very important. It's about creating a better future for the planet and for future generations. And by leveraging digital technologies with a sustainability mindset, we can build more resilient, efficient, and sustainable businesses and communities. I think this is our chance to redefine what success really does look like in the 21st century and beyond.
Christina, thanks again for the very enlightening conversation. I leave the conversation today feeling very energized. It was extremely insightful. I learned a lot. So thanks again for joining us today.
Thank you very much, Patrick. It's been a real pleasure. And thank you for all the work you're doing there at ESG Flow too. It's amazing.
So that brings us to the end of today's episode. We've heard some fascinating insights on ESG and digital transformation. Hope you enjoyed it as much as we did. We also want to thank ESG Flow for allowing us to promote their episode. You can find more information at esgflow.com. Thanks for listening. If you haven't already, be sure to subscribe to our podcast on Spotify so you'll be notified when the next episode is out. See you soon.
The Power of Possibility, a podcast from SPS.
Hi, welcome again to The Power of Possibility, a podcast from SPS. In recent weeks, large corporations have been mandating a return to the office, although the workplace model has evolved. While companies like Apple were early to recall employees, there's still a growing wave of hybrid work models emerging across various industries. The Global Workplace and Occupancy Insights report from CBRE shows a significant shift, where the ratio of people assigned to seats has exceeded 100%, pointing to more flexible space utilization. But the real question remains, how can hybrid models endure in this changing landscape? And how do ESG and employee experience influence these decisions? To answer to these questions, we have here two fantastic guests with us today to discuss the evolving landscape of hybrid workplace models. Joining me is Nicole Mangarella, Head of Global Technology and Innovation at SPS. Hi Nicole, how are you?
Hi, Miguel. I'm good.
And also with us is Suzanne Vier, the Global Head of Human Resources at SPS. Great to have you here, Suzanne.
Hello, Miguel. Hello, Nicole.
So let's start with the first question. Suzanne, how do different models on-site and hybrid affect productivity and company performance?
Well, a recent Stanford study found out that hybrid work improves employee satisfaction and reduces attrition by 35%, which we know positively affects overall company performance. Satisfied employees tend to be more productive and simply stay longer in their jobs. The choice between an on-site model and a hybrid workplace has significant implications for both productivity and the overall company performance. In a traditional model, productivity is often measured by hours in the office, but this doesn't necessarily equate to outcomes. Hybrid models, on the other hand, tend to focus more on results, giving employees greater autonomy over how and where they complete their tasks. This can lead to increased productivity, as employees are often more engaged when they have the flexibility to work in a way that suits their personal needs and work styles. Having said that, hybrid models also require careful management. Without proper communication channels and accountability systems, some employees might struggle to stay focused, leading to potential dips in productivity. However, companies that invest in the right technology and management training often find that hybrid work enhances overall performance.
Okay, great. And in your opinion, how does it impact retention and recruiting?
Very good question. Let's first keep in mind that obviously not all employees can work remotely. It should be taken into account that remote work is only feasible for jobs where it can be done without affecting the performance of the role. But for those that can, hybrid models are increasingly becoming a competitive advantage in attracting and retaining top talent. In a post-pandemic world, many employees value the flexibility of working from home, which can greatly impact recruitment decisions. In fact, a 2022 study by McKinsey found that 70% of employees consider flexible work options a top priority when evaluating job opportunities. Hence, companies that offer hybrid models are likely to see higher retention rates as a result. And from a recruiting perspective, hybrid models allow organizations to tap into a broader talent pool. You are no longer limited to candidates living within commuting distance of the office. This opens the door to hiring the best talent globally without the constraints of geographical boundaries.
Thanks, Suzanne. Nicole, from your experience in SPS, and how can organizations use technology to create a sense of presence and connection among remote team members and facilitate trust building among remote and in-office employees?
Yeah, it's an important question. I think there's two aspects to that. There's the technology that you use, and then there's the cultural fit within the organization and within the teams and how you use that technology. So, for example, digital collaboration tools are really critical, but they need to be more than just a communication platform. You need to have like regularly scheduled touch points or coffee chats or ways to sort of create some of those beneficial in-office sort of situations in a virtual environment. So when I first joined a global team and no one else was working locally with me, we would schedule weekly coffee chats with different members of the team just to touch base, to say hello, to hear about what types of projects they were working on. So you can recreate some of those spontaneous interactions that would normally happen in an office in a virtual environment. One of the other key technologies that helps to connect remote workers with teams that might be on site or in other off-site locations are things like ticketing systems that are very simple and have been around for years, but they make work more visible regardless of where it's being done. So this sort of transparency can help to really build a lot of trust, especially for managers, because everyone, whether they're remote or they're in the office, can see progress that's being made and contributions from their team members. This also really helps to diversify where work can be done. So, for example, whereas traditionally most of the work would be done in an office for, print production, for records management, even for shipping and prototype design, now, because you have a ticketing system and you can track where things are and where things are happening through the entire process end to end, you have the ability to do some of that work in lower cost geographies, in areas where talent is more readily available. So it reduces the cost for the business while you still get that high level of service and turnaround for the employees as well. And then finally, I think the key for really keeping people engaged from a technology perspective is also some of the in-person technology that companies have started to integrate into their offices for team offsites or in-office brainstorming events. It's key that when you come into an office, you have tools that you can easily collaborate with, but then you can share that information in a digital way so that you can take action on those items and those great ideas after that on-site session. For example, we used to take our solutions teams, which are scattered across the country and across the globe, and have them come together at regular times for specific workshops. Things like smart boards and digital collaboration tools then help that information that happens in the on-site workshop translate into actual off-site actions.
The pandemic pushed companies to rethink their operations overnight, especially when it came to adapting hybrid workplace models. Since then, we've seen many successful transformations across industries. A great example is the global insurance company Zurich. In the British division, SPS helped digitize millions of documents in just 2 weeks, enabling 4,500 employees to securely access their work remotely. This rapid shift not only ensured business continuity, but also set the stage for long-term efficiency in the hybrid model. Nicole, how can companies strategically optimize their facilities for hybrid work? And what technologies can they use to track utilization effectively?
It's a really great question. And I think we've seen a lot of companies start to really prioritize flexibility in their space. Whether it's new space that they've just leased or it's space that they've had for years and are starting to repurpose. But it's really important that that space be able to accommodate and adapt to different types of needs. Sometimes you need more collaborative environments and more places where you can get a lot of people into a room and share a whiteboard or share a digital smart board. But sometimes you also need private areas for more focused work. Or hybrid team meetings where you are going to be on a virtual call and you need that privacy and that quiet in the office as well. One strategy that we've seen a lot of businesses talk about is creating these sort of collaboration hubs where employees that come into the office have an area that's specific for team-based work. So you know that section of the office might be a little bit louder, might be a little bit more, a lot more people, a little bit busier. But then you have a second area of that office that's a more quiet zone so that if you need to do focused work, you can still come into the office and have space to focus while you also have space to collaborate. So a lot of companies We've seen them sort of zone out their floors by the type of work that they're going to do, and then focus on the type of technology that needs to be in those spaces to make what people are doing in them more effective and give them that control over their environment. And in terms of tracking utilization, there's been sort of a proliferation of these sort of space booking platforms for people to go in and reserve desks, reserve meeting rooms in advance. This gives managers really good data about how spaces are being used and who's reserving what. These are also typically coupled with some sort of IoT integration so that you can see it was reserved for 10 people. Did 10 people show up to the room? Was it only 8? Was it 12? Do we need more space? And it's helped facilities teams just to be able to adjust the layout and to plan for those types of spaces as well.
Okay, and Suzanne, what are the most common obstacles companies face in people management and training when transitioning to hybrid workplace models?
We have learned that managing hybrid teams require a fundamental shift in leadership and training strategies. One challenge, for example, is to ensure that all managers can effectively support both remote and in-office employees, ensuring that unconscious biases do not affect management. As you know, in many cases, managers might unintentionally give more attention to in-office workers simply because they see them more often. And to overcome this, companies need to invest in training programs that teach our managers how to build relationships and trust with their teams, this regardless of the location. And at SPS, we have seen organizations that successfully adopt hybrid work models by emphasizing inclusive leadership, ensuring that remote employees feel just as engaged and supported as those in the office. It's about creating a culture of fairness and transparency where every employee has equal access to opportunities and resources.
And what do you think about training? How training is being adapted to hybrid workplaces?
Very good question. In hybrid workplaces, training needs to evolve to ensure it remains effective regardless of where employees are located. One key adaptation is the move toward blended learning. This means combining self-paced courses with live virtual sessions. This allows employees to engage with training materials on their own time while also participating in interactive sessions that provide real-time feedback and support, for example. Training is being adapted to suit hybrid workplaces by incorporating more virtual and learning formats that matches the employee's own schedule. And additionally, companies are placing a greater emphasis on training their managers to lead hybrid teams. This includes, for example, coaching on how to maintain team cohesion, how to track performance remotely, and manage, as already mentioned, unconscious bias between remote and in-office employees.
Thanks, Suzanne. Nicole, how should executives evaluate and select collaboration tools that align with their organization's hybrid work strategy?
Yeah, we do a lot of evaluation of different technologies constantly at SPS. And I really love Suzanne's point about how you can sort of overcome that unconscious bias that managers might have about seeing somebody in person versus making sure that they're working well remotely. And I think that's really the key for any technology question and any sort of what are you looking for is you need to start with why you're looking for that type of a tool, not just what's popular on the market. Is everybody using something? You need to sit down as an organization and look at why are we looking for this? What purpose does it serve? And then how can we communicate that why with our wider employees, with the groups that we want to use this digital tool or this new technology so that they understand it and they can embrace it as something that makes their work more productive, makes their work more visible, helps them to be more effective, whatever that why is. For example, during the pandemic, we saw a lot of companies say, oh, we should look for a digital mail platform. We have mail coming into offices. People can't go into the office safely anymore. We should find a digital mail platform. But what we found when we started to work with them was that they really needed to find more value than just accessing the information in a digital format in order to really make it effective and to encourage adoption and for employees to see a benefit. They needed to couple it with workflow automation tools that either already existed or could be combined with those platforms on the market. So it's really important as part of that evaluation process, once you've identified the why, to identify what environment that tool needs to work in, and then also what you need to make that access safe in a hybrid working environment. Many tools now that used to be used only in an office where your screen is private, your network is secure, are now used in coffee shops or on home Wi-Fi. And so the security aspect is really, really important, and making sure that your security and your InfoSec teams are involved as part of that evaluation. Make sure that you don't pick a tool that then puts your business at risk.
I guess that also employee experience is very important, very relevant here. So in what ways can technology enhance the employee experience in hybrid workplaces, and how does this impact business efficiency?
So there's a few different ways that it can enhance the employee experience, both from when you're working from home and you need access to information or services or resources that might be located in the physical office, and when you're physically coming into the office. That's probably changed a lot since the last time you were there if you've been out or traveling. And for us, it's really a focus on what helps employees access services and things that they need to get their job done and feel supported, whether they're working remotely, they're on the road, they're at a client site, or they're physically sitting in an office. And technology tools, whether it's web portals, mobile apps, communication platforms, they can help to make those services easier to find and more visible so that they can get more done day to day. The communication tools also play a really big role. So that seamless communication of, I've submitted a request, I need a conference room, I need AV support, I need a print job completed, to be able to see that through every step in the process also helps to build trust and confidence for employees that might be working remotely and can't just pop down to the print center and see if the job is progressing the way that they want. So technology can help employees feel more comfortable to use those services and also feel more supported. The impact that this then has on business efficiency means that managers can see what's being completed without needing to hover over employees or resort to timesheets or things like that. But the culture does need time to adjust to those new ways of managing. As Suzanne pointed out, there's a lot of training and different ways of working that have evolved. And so I think it's a combination of really giving employees the tools that enhance that experience and make them more effective, but then coupling that with the training of why they want to use those tools and how to really incorporate them into the way that they've been working as well.
Thanks, Nicole. This last question is for both of you. And it is, given all these considerations, let's return to our initial question. How can hybrid models endure, and what are the future predictions about it? Looking ahead, like 5 to 10 years, how do you see hybrid models evolving?
Sure, I think it's an interesting question. For me, my first job was actually a fully remote job. So in my mind, we've always really had hybrid working. It's just become more visible and more accessible to a wider group in the workforce now. There's no real right answer. It's different for every company, and it's different for every team and culture within that company as well. I think we're more likely to see sort of variations on the work from anywhere theme in the next coming decade, especially as people can now work internationally. Maybe they have opportunities that they didn't have in the past with the openness of hybrid working. I think from a company perspective, they'll continue to refine their strategies to create the types of environments that will help them to be successful, whether that's giving more tools for remote work or redesigning and re-evaluating their physical space. That's something that I think will continue, and we'll see a lot more technology used to help them make those decisions about what to do. There's been a lot of talk of predictive analytics in space utilization and in forecasting to be able to help to make those decisions and decide where to invest in, collaboration tools and physical spaces and things like that. In the longer term, in the 5 to 10 year cycle, I think it's really difficult to predict. I don't think anybody 5 years ago would have predicted a global pandemic. So, but I do think it's going to continue to expand as far as different options and the ability and the need to sort of track some of the environmental impacts and the ESG impacts. I think we'll have a better way to quantify what that does, both on the environmental side with remote working and on the social side in giving people opportunities to join the workforce and to contribute where they might have had limitations in the past.
It's a great forecast.
I'm optimistic.
Yeah, you do. It's good. Okay, and what do you think about it, Suzanne?
Yes, ultimately what works best for a company will depend on the culture and tool set. And I liked how Nicole phrased it, understanding and then following the why. The companies that succeed will be those that listen to their employees and invest in the right technologies and focus, of course, as always, creating exceptional employee experiences. The endurance of hybrid models hinges on flexibility, employee engagement, and continuous adaptation. Over the next 5 to 10 years, I believe we will see more companies refining their hybrid models to better suit their workforce. And here, technology will continue to play a crucial role, with all the advancements in AI and machine learning helping companies to track the productivity and as well employee well-being more effectively. These technologies can also provide insights into space utilization and ensure that office environments are used optimally. Looking more long-term, companies that invest in both technology and employee experience will be better positioned to maintain a successful hybrid model, I'm convinced. We might also see an increase in co-working spaces, virtual presence technologies, and tools that foster a greater collaboration across distributed teams, hopefully.
Okay, so thanks a lot for your collaboration in this episode.
Thanks.
Thank you, Miguel. Thank you, Nicole.
Thanks. And also thanks to all our listeners in Spotify. And if you enjoyed this episode, don't forget to subscribe so you'll be notified as soon as the next one drops. We've got more exciting guests and topics coming your way, so stay tuned and see you next time.
The Power of Possibility, a podcast from SPS.
The next United Nations Climate Change Conference will be held in this month, in November. And as sustainability has become a crucial factor globally, companies are under increasing pressure not to only commit to ESG practices, but to do so transparently and effectively. ESG is no longer a nice to have, but a must have. That's why customers and institutions are now focusing on issues like greenwashing, where companies falsely claim to be environmentally friendly. But another term gaining attention is green blushing, where companies fail to publicize their sustainable practices to avoid being scrutinized or criticized for not doing enough. In this episode, we'll explore all these topics and also why ESG is a key factor today and how executives can leverage it to meet stakeholders' expectations and lead in a competitive landscape. Welcome to this new episode. Today we have Christina Banahan, ESG Global Director at SPS, who will help us understand how ESG practices have become the key for companies to be more competitive. Welcome, Christina. How are you?
Good, thank you. Nice to be here.
Thanks for being here today. Well, to start, I would like to ask you, how do strong ESG strategies contribute to the long-term stability and resilience of companies?
Yeah, that's a good question. I think the first thing to understand is that strong ESG strategies are far more than just good initiatives. They're about managing risk, ensuring sustainability, and driving real values. And companies that prioritize ESG aren't doing it just for show. They're actively preparing for the future. ESG is really crucial for long-term stability and resilience because it fosters adaptability, and it's not about ticking boxes or meeting short-term goals. It's about aligning the entire business with sustainable, purpose-driven practices that create value for all stakeholders. So companies that embrace ESG build trust and a strong reputation, which becomes invaluable during an economic downturn or a crisis.
Yeah.
And that trust doesn't just improve brand loyalty, it also helps attract top talent and customers who really want to engage with businesses that reflect their own values. Environmentally, companies focusing on sustainable practices, whether through energy efficiency or waste reduction or resource management, they protect themselves against regulatory risks and rising costs, particularly as resources become more scarce. And each aspect of ESG feeds into the other. Ignoring any one of these pillars leaves a company vulnerable. For instance, a company that has poor governance will often struggle to implement meaningful environmental and social practices, leading to short-term thinking that can ultimately harm them. So good governance, on the other hand, ensures transparency and accountability, and it really is the backbone of corporate resilience, helping companies weather any crisis.
I see. And how does ESG impact stakeholders, particularly in terms of risk management?
Yeah, from an investment standpoint, companies with strong ESG attract long-term investors who prioritize sustainable growth over short-term profits. And these investors they're likely to stay during uncertain times, providing the stability that's needed to navigate challenges. And when you're talking about risk management, companies with robust ESG frameworks are often better equipped to anticipate and address risk like climate change or regulatory shifts. By addressing these challenges proactively rather than reacting after the fact, companies can avoid disruption and ensure continuity. And this forward-thinking approach builds adaptability into the business. And that allows them to pivot and to respond to changes in the market or environment more effectively. But I think it's important to note that ESG shouldn't be viewed just through a lens of risk.
Sure.
It also drives innovation. So when companies align with societal and environmental needs, they foster creativity. That helps them develop new products and services that benefit both the business and society. So it's about being future ready, not just reactive. And I think internally, ESG also enhances employee engagement. You know, employees want to work for companies that stand for more than just profit.
Yeah.
When they see their company committed to a positive change, it boosts that loyalty and productivity, creating internal stability that becomes invaluable when external challenges arise. So I suppose in essence, that companies that fully integrate ESG into their core operations are building both stability and adaptability. They're better equipped to pivot when needed, respond to new challenges, and really innovate in ways that keep them competitive. ESG is not just a trend, it's a key to staying relevant, resilient, and successful in what is an ever-evolving world that's increasingly demanding more from corporations.
Okay, thanks for that, Christina. I would like to know also, how can companies balance transparency with the risk of being criticized for not doing enough? And the most important, how can companies effectively communicate their genuine ESG efforts?
Yeah, you're absolutely right. It's not easy. And balancing transparency with the risk of criticism is indeed one of the most difficult challenges that companies face today. On one hand, transparency is crucial for building trust. But on the other hand, there's also that fear of being criticized for not moving fast enough or not doing enough. And the key to managing this is finding the right balance, being open about progress, but while also acknowledging that the journey towards sustainability is ongoing. And it's about being authentic. Companies should communicate their ESG efforts in a way that highlights both their achievements and the areas where they are still evolving.
But it's quite hard, right?
People really don't expect perfection, but they do expect honesty. So instead of trying to present themselves as being flawless, businesses should focus on sharing their journey, the successes they've had, but also the challenges they have encountered or may encounter, and the plans that they have for the future.
Okay, but how can they convey that message?
I suppose it really is about effective communication that goes beyond just providing data. So companies need to tell a story that connects sustainability with their broader mission, combining emotional appeal with specific metrics such as emissions reductions or other tangible results allows them to demonstrate authenticity while also showing real progress. Consumers, for example, are far more likely to trust a company that says, look, we've made progress, but we've still got a lot more work to do, than one that claims, oh, we've solved everything without any real evidence. And admitting gaps in ESG and recognizing areas for improvement, it does build more trust. Both consumers and investors understand that no company is perfect. And when businesses openly discuss areas that still need work, they signal that commitment to long-term progress rather than short-term gains. And of course, it's like you said, ESG is really complex and no company can address every issue at once. That's why it's really crucial to provide regular updates and back up the claims with measurable results. Transparency is about being honest about what's been achieved and what still needs to work. You still need to work on. People respect companies that are candid about their challenges and willing to admit that they need more improvement.
Yeah.
And for companies just beginning their sustainability journey, that fear of being accused of greenwashing is real. But the key is to communicate openly about the process instead of pretending to have achieved all their goals. Companies should be clear about where they stand. So if, for example, they're aiming for net zero by 2050, they should share what progress have been made so far, but also what steps they still need to take. So again, it's about being transparent, not just about the destination, but about the process. So ultimately, it comes down to authenticities. When companies present their ESG efforts as a part of a genuine, ongoing journey, supported by real data and third-party validation is another point, they build that trust, even if they aren't perfect. Consumers, investors, employees, they're all drawn to organizations that are open, transparent, and committed to that continuous improvement. And this approach builds that long-term value and resilience that we mentioned earlier, allowing companies to foster that support and credibility as they grow towards the bigger goals.
Okay, what is green blushing and how does it differ from greenwashing?
Yeah, it's a good question. I came across the term a couple of years ago. So if I look at greenwashing first, that occurs when companies exaggerate or fabricate their sustainability efforts to appear more environmentally responsible than they really are. And it really is a deceptive tactic, capitalizing on the growing demand for eco-friendly products without actually putting in the hard work to back up those claims. So, for example, a company may claim that they have green products based on a minor improvement like using recycled packaging, while ignoring the fact that the rest of the business operations remains highly polluting. And I think everybody is aware of that well-known example of greenwashing in the automobile industry, when a major car manufacturer marketed their vehicles as eco-friendly due to a certain clean technology, but behind the scenes, their actual emissions were far higher than they were advertising. And this created a misleading perception of sustainability, focusing on appearance rather than a real genuine environmental impact. And such practices not only mislead consumers, but they also erode trust, making people skeptical about claims of sustainability. And this skepticism can harm entire industries, making it harder for companies that are truly committed to sustainability to really gain the trust that they deserve.
And what about this new concept, green blushing?
So yeah, in contrast to greenwashing, green blushing is the opposite. Instead of exaggerating efforts, companies downplay or understate their genuine sustainability initiatives. As sustainability becomes a more critical business factor, many businesses struggle with balancing the need for transparency with a real fear of being criticized for not doing enough. And that leads them to hesitate in promoting their achievements. And an example that we discussed as a group in college was Unilever. So through their sustainable living plan, they've made real strides in reducing their environmental footprint and their social conditions in the supply chain. Yet they've sometimes been really cautious about promoting certain accomplishments, perhaps waiting until they've achieved more global alignment or further progress before making bold claims, understating real progress to avoid premature scrutiny or criticism. But actually, greenwashing and green blushing can harm a company's credibility, but in different ways. So greenwashing is easier to detect because it's often quite flashy and comes under scrutiny. But green blushing, it's more subtle and it can go unnoticed. But companies that engage in it really do miss out on the chance to build stronger relationship with their consumers and investors who really do value that genuine, sustainable efforts are going on.
Either way, how can companies ensure that their ESG claims are authentic and verifiable?
Yeah, that's a good question, and it's a crucial question, especially in today's landscape when consumers, investors, and regulators are all paying really close attention to ESG. So to ensure ESG claims are authentic and verifiable, companies really do need to focus on several key strategies. One of the first steps is setting clear, measurable goals. It's not enough to simply say we're committed to sustainability. Companies need to specify targets like reducing carbon emissions by a certain percentage or improving labor conditions, and they must publicly track this progress towards these goals.
I totally agree.
Even on setbacks, which builds that credibility that we were talking about earlier. External validation also plays a huge role in ensuring ESG claims are not just marketing speak. So, for example, if a company claims to be carbon neutral, a third-party audit can verify that it's taken the steps to offset emissions, or it will also look at whether their methods are questionable. And this kind of external validation reassures investors and other stakeholders that the company's ESG initiatives are really grounded in reality. And additionally, ESG must be integrated into the company's core operations.
True.
This requires strong governance and a cross-functional effort involving teams from, for example, operations, finance, HR, legal, marketing. Everybody needs to be involved and collaborate to ensure that the company's sustainability efforts are real, measurable, and consistent. And strong leadership involvement ensures that accountability, turning ESG from being a marketing tool to a fundamental business strategy. And moreover, making data publicly available and easily accessible is really important for transparency. Companies should publish an annual sustainability report, track their progress against industry benchmarks, and make the information easy for stakeholders to find. And this openness removes any ambiguity about whether a company is delivering on its ESG promises. And I suppose finally, the third-party audits or certifications can further verify the accuracy of the data, making it harder for companies to inflate or give false achievements.
In 2023, SPS introduced a global environmental policy and a carbon reduction strategy, with the first step focused on enhancing data capture processes to better track and manage our environmental impact. These initiatives led SPS to achieve a 50% reduction in Scope 2 emissions in 2023, which includes emissions caused indirectly through the energy we purchase. This reduction was driven in part by better data capture, but also by the switch to renewable energy and the adoption of hybrid and electric vehicles. Furthermore, SPS launched the creation of a global ESG governance board, to oversee sustainability efforts, with local ESG committees addressing region-specific challenges. And all of this data comes from the SPS 2024 Sustainability Report, led by Christina. Christina, this is what SPS is doing to become more sustainable. But what about our clients? Can you tell us a little bit about how SPS help clients become more sustainable?
Yeah, so at SPS, our focus extends beyond our own sustainability goals, like you said. We are committed to helping our clients achieve theirs through tailored and innovative solution. By harnessing, for example, digital transformation and operational efficiency, we enable our clients to reduce their environmental impact while enhancing their overall performance. So as I discussed in a previous podcast, digitizing information not only reduces demand for physical paper, it also cuts the need for storage and transportation, and it supports a more flexible hybrid working model, which in turn expands the talent pool for our clients. It also strengthens data protection, which is vital, and provides a reliable audit trail, ensuring that the company's compliance meets the highest standards. And these solutions address all three pillars of ESG. So it's an holistic, seamless approach. So, for example, we've partnered with the world's largest banks and insurance companies to introduce global digital mail platforms, digitizing millions of documents that enable remote employees to operate more effectively. Mm-hmm. In addition to digitizing, we leverage advanced technologies, including AI, to automate much of the data capture that would previously have required a lot of manual input from staff. And this automation significantly accelerates the process, allowing businesses to move further along the application or the claims process. And as a result, employees can focus on more valuable tasks. So it frees up time and effort that would have been used on routine data entry. This outcome is a streamlined operation that enhances both efficiency and overall customer experience. And while the financial and insurance industry are fairly advanced in these areas, the healthcare sector has a lot of untapped potential for digital efficiency. When healthcare data flows digitally, the costs drop and both efficiency and quality rise. So, for example, the NHS, we partner with them, and they face significant pressure to manage planned care, particularly in outpatient clinics where appointment volumes have doubled over the last decade. Mm-hmm. Booking administration services are a major cost burden, with 68% of administrative time being wasted. So to address this, SPS partnered with the NHS through a managed booking admin service, automating bookings and reducing errors. We also support the NHS by digitizing patient records, which provides 24/7 access to critical data from multidisciplinary teams, which enhances patient safety and minimizes errors. And another area was the clinical coding process. This was traditionally a fragmented and a very labor-intensive function. We have now digitized that, and it allows healthcare professionals to focus on core patient care duties while reducing overhead costs. These solutions have improved patient experience, it's maximized clinical efficiency, and it's also freed up resources for reinvestment into frontline services, such as hiring additional doctors or nurses.
Perfect. And how can companies streamline processes to ensure timely and accurate ESG reporting?
Yeah, that's another really good question. Yeah, streamlining processes for ESG reporting hinges on that automation, digitization, and centralization. So here's how these strategies will work.
Yeah.
First, with digitization, that simplifies the process by automating how data is collected. So that not only speeds up the process, but also improves accuracy because it reduces human error and ensures consistent data collection for reporting purposes. Standardization is also key, and that is whether the data is structured when it's being ingested or unstructured. So you're establishing clear business rules and frameworks for collecting and reporting data, which helps ensure that consistency. And this approach certainly makes it smoother, particularly when we have new regulations coming down the line, like the EU Corporate Sustainability Reporting Directive, the CSRD.
True.
And additionally, centralizing data allows companies to store all relevant information in one place, so it makes it easier to access, to track, and to report. And automation really does reduce that manual work, while centralizing ensures everything is easily accessible, which helps companies maintain timely and accurate reporting. So by applying these strategies, businesses can effectively streamline ESG reporting, improving operational efficiency and critically governance.
Well, in your recent collaboration on the podcast Sustainability Voices with Patrick Obeid, a podcast we highly recommend to our subscribers, you mentioned the relevance of IT security awareness in digital transformation. How important is IT security awareness in protecting ESG data, and what steps should companies take to keep this information secure?
Yeah, it was a great podcast. It was great to talk to Patrick, and another really good question. IT security awareness, it's crucial for protecting not only ESG data, but all types of sensitive data. So including operational, governance, customer, employee, and financial data. These data sets often contain highly sensitive details, and any breach can lead to severe financial, legal, and reputational damage. And as companies are increasingly relying on AI and data analytics and digital platforms to track and report on ESG initiatives, the volume of sensitive data they handle continues to grow. This includes emissions data, supply chain information, employee welfare details, and financial records tied to sustainability efforts. And if they're not properly secured, the consequences can be devastating, leading to cyber attacks, data breaches, and the real loss of stakeholder trust.
And how a data breach could impact on this?
The impact of data breaches extends well beyond the immediate financial or legal penalties. They can result in long-term damage to consumer confidence and the loss of investor support. So if we look at the classic case of Equifax in 2017, hackers accessed personal information of 147 million people. And this was due to a failure to a patch of a known vulnerability. So the fallout included $700 million in legal settlements and lasting reputational damage. So in the context of ESG, where transparency is critical, any failure to protect data can seriously undermine stakeholder trust in a company's governance. So a robust IT security involves regularly conducting security audits to identify these vulnerabilities and ensure that protective measures are up to date. Securing real-time ESG data is just as important as collecting it, and regular audits signal that a company really does take this protection seriously, which serves to strengthen its reputation. Beyond, I suppose, the basic security measures like encryption or multi-factor authentication, companies should leverage advanced technology such as AI to detect irregularities and prevent breaches before they escalate. But even the best technology won't suffice without a strong culture of IT awareness. Regular training in how to handle sensitive data ensures that everyone understands the risks and can act responsibly to prevent threats. And additionally, I think companies must ensure that third-party partners are handling ESG data, or any data for that matter, that they too adhere to the same level of security vigilance. The security of a company's data is only as strong as its weakest link in its ecosystem, so it makes it crucial to carefully vet partners and prevent multiplying the risk of breaches. So I suppose in summary, ESG data, and indeed all sensitive data, requires a comprehensive strategy that integrates advanced technology, human awareness, and continuous monitoring. And by fostering a culture of vigilance, ensuring partners uphold the same security standards, and implementing robust cybersecurity tools, companies can safeguard their data while reinforcing their commitment to responsibility, transparency, and governance.
Okay. What are the key metrics that companies should focus on to measure the success of their ESG strategies?
Yeah, well, I suppose if we look at the three pillars then, so the environmental side, companies usually track a few key areas. So first would be their carbon footprint, essentially how much greenhouse gases is the company emitting. They could also look at their energy efficiency, like the percentage of energy they're getting from their renewable sources. Water usage is another big one, focusing on how well they're managing and reducing consumption, along with waste management, which looks at how much waste they produce, how they can reduce it, or how they can recycle it. And for some industries, air quality, biodiversity, and land use are also important factors to consider. Sustainable sourcing and resource efficiency are crucial too. Where are the raw materials coming from? Are they certified, organic, or fair trade? And how are you managing those resources to minimize depletion? And I suppose finally, companies are also looking at the circular economy. So how their products are used, reused, and eventually disposed of. So are there take back or recycling schemes in place to close that loop? The societal metrics really focuses on your own people, so your employees, and the community impact. One of the key areas would be employee well-being, which includes tracking things like job satisfaction, access to training, turnover rates, and of course, the health and safety of your employees. Diversity and inclusion is another big one. Companies are looking at representation of women and minority groups, especially in leadership roles, to make sure that they're building a more inclusive workplace. So community engagement plays a vital role as well, covering initiatives like volunteer programs or charitable donations and broader societal contributions. It's equally important for companies to monitor the labour practices within their supply chain, ensuring a fair wage, ethical treatment, and the safe working conditions, particularly in global operations. Executives cannot afford to claim ignorance when it comes to poor working conditions in their supply chain. Responsibility and accountability are crucial, and we've seen this played out with many of the large manufacturers around the world. And I suppose additionally, depending on the industry, factors like customer satisfaction and data privacy are also considered to be a part of that broader societal responsibility landscape. And then finally, governance. This really is the overarching umbrella. It's about the transparency and accountability. It covers things like board diversity and independence, making sure that there are diverse perspectives at the top. Executive compensation is another critical area where leadership pay is increasingly linked to ESG targets such as employee satisfaction or carbon reduction targets.
Let's focus now in another very trending topic, which is how AI is affecting ESG.
Yeah, you're right. It's everywhere now. So technology is revolutionizing how companies collect, track, and report on the ESG data across industries. So, for example, in manufacturing and transportation, AI can track emissions in real time, pulling data from multiple sources like energy use and fuel consumption. So in healthcare, digitizing patient records not only reduces paperwork, but it also allows AI to analyze care patterns and optimize resource use, aligning both social and governance metrics. Similarly, if you look at the financial services, digitizing documents reduces waste and streamlines governance through more efficient reporting processes. And this kind of technological standardizations ensures that ESG metrics are consistent, accurate, and verifiable. And AI really is a game changer for ESG reporting. It automates the collection and analysis of data, such as emissions, supply chain metrics, and employee statistics, transforming what was months-long processes into tasks that could be completed in a fraction of the time. By using AI, companies can shift from reactive to being far more proactive. They can quickly identify where they're excelling and where improvements are needed, allowing them to quickly adjust to meet the sustainability goals and targets that they've set. I suppose ultimately the key to measuring ESG success lies in having the right data, and technology enables companies to gather, analyze, and report this data efficiently. This helps businesses become more transparent, proactive, and efficient in their ESG efforts, turning sustainability into a core driver of growth and long-term success. And you spoke to Michael a couple of weeks ago.
Yes.
So he was recently at the 2024 Banking Summit, and the CEOs from the world's largest banks were there, and they highlighted two key challenges: the potential for 50 to 60% efficiency gains in document management and processing, and the growing strain of resources due to demographic shifts. So although I previously mentioned that banking and insurance are more mature markets compared to healthcare, there's still considerable room for improvement. And the solution to both these challenges really does lie in data automation. By automating processes and leveraging data more efficiently, banks can really unlock sufficient operational efficiency while alleviating some of the resource constraints.
Okay, I think this interview is coming to an end, but just for the final question, do you have any forecast about the role ESG will play in the future?
Yeah, ESG it's here to stay, and for good reason. At the same banking conference, Lutz Dietrich, the CEO from BNP Paribas, made it really clear that ESG is demanded by all stakeholders. And they mentioned that banks cannot afford, but any company really cannot afford not to have a strategy on this. The message is simple. ESG is no longer optional. It's now a fundamental part of any business strategy, driving everything from stakeholder engagement to long-term resilience. And you mentioned and highlighted it at the introduction that making a positive impact is no longer optional for businesses. Today's world demands a new and an authentic perspective. As we've discussed, sustainability and operational efficiency aren't mutually exclusive. They really do complement each other. And moving forward, companies that embed ESG authentically into their core strategies will not only survive, they'll really thrive in what is an ever-evolving, fast-changing landscape.
Okay, thanks Christina for your help in this episode. It seems you've truly mastered this topic once again, as the title of this episode.
We've still a long way to go, but we're getting there. And thank you for your time today. It was a real pleasure talking to you.
Thanks a lot. And of course, thanks to our listeners. Remember, you can subscribe to this podcast to stay updated and get notified about the new episodes. We appreciate you tuning in, and we'll catch you in the next one. See you soon.
The Power of Possibility, a podcast from SPS.
From the moment a client files a claim with their insurer, a complex chain of processes begins, gathering data, verifying details, and assessing coverage. These steps can be time-consuming, leaving 1 in 3 customers dissatisfied with the claims process. To address this, insurers are implementing AI and automation to improve customer satisfaction. In fact, several reports predict that AI could reduce costs by up to 40% while making services faster and simpler. But how is AI improving claims management and fraud detection today? And what are the trends and forecasts shaping the future of AI in the insurance industry? To understand a bit more the evolution of this, we have with us Christian Ott, Director of Global Solution Design Insurance at SPS. Hi Christian, welcome to this episode.
Great to see you, and looking forward to this episode.
Well, let's start with the first question. What makes AI more than just a tool for automation in the insurance industry? And how is it transforming claims management?
So rule-based automation has been a core focus in the insurance industry for many, many years, and specifically in claims management, where it has generated significant efficiencies. But there's 2 main limitations, First of all, implementations are typically very time-consuming and therefore costly. And as a result, sub-processes with lower volume do not lead to positive business cases. And secondly, rule-based automation requires a solid understanding of historical data to know which decision rules lead to superior economic results. And this data has either not been available or the capacity to draw relevant conclusions out of it was lacking in the past. So AI is now really a game changer, as it can address those major challenges of the past. Setting up a self-learning algorithm is much less cost-intense than specifying and implementing complex business rules. And secondly, AI can draw meaningful conclusions out of big amounts of data by its own, if the data is available, of course, and not to forget, if it's of really high quality.
Can you walk us through some key applications in claims management today? What processes are currently being automated with AI?
So we do see innovations in various fields, such as in fraud identification, claims prevention, or assessment of claims amounts, just to name a few. But let me illustrate the fraud example a bit more in detail. Imagine you have a certain amount of criminal energy combined with a professional role at an insurance company that can channel a large number of incoming claims. The second one, tied agents typically do, as they serve as kind of a single point of contact to the insurer for their clients. So in case of a claims event, for example, a car accident, they are contacted first and they will organize support, such as a garage appointment, and they will collect all the relevant claims documentation from their clients. Up to certain claims amounts, they are even entitled to decide on their own whether the claim is covered and the insurance company will pay. This should simplify and shorten the process and intensify the client relationship of the agent. So in general, it's a good thing, but on the other hand, it doesn't take too much imagination to think of fraud potential resulting from this practice.
I see.
So agents do have close relationships with their customers. Some are even personal friends. And the agents could, of course, help to get uncovered claims paid or even create and let the insurer pay for imaginary claims. In one of my recent discussions I had with claims experts, I heard that one insurer has been able to identify a tied agent who has making use of this potential for years by creating fake invoices through duplicating and manipulating marginal aspects, such as the invoice number or amounts of a real invoice. Internal claims managers haven't recognized this, as the individual electronic invoices were not different from the original one, and the claim amounts were always below the threshold for a more intense analysis, such as an on-site inspection of the damaged car, for example. So AI, with its potential to identify patterns much better than humans, was signaling the fraud team that over a longer period there were so many similar invoices from an individual agent that they started an audit. And when looking deeper into it, they found that in many cases the insured cars hadn't been damaged, and the repair shops confirmed that they had never issued the invoices submitted by the agent.
You recently worked on a significant white paper about the industrial use of AI in insurance, focusing on success factors and strategies. What are the main challenges that insurance companies face when implementing an AI strategy in claims management, and what obstacles do they encounter?
There are a couple of common challenges that prevent AI programs from yielding the full benefits possible. It starts usually with the governance framework that an insurer defines for such a program. What we have seen is that in many cases, the depth of value creation of the insurer is quite, and I would even say too high, considering that skills and assets required for a successful AI journey are substantially different from what insurers have required in the past. And the track record of successfully demonstrating flexibility and managing change is also limited. So what I recommend to insurance managers responsible for an AI program is a pre-analysis of what is required and an honest assessment of what they can do well and where it is most likely better to partner and get access to external expertise. And secondly, as stated before, any AI implementation depends on having access to the relevant data in the required quality. This is quite often a challenge, as input management function, handling all incoming data and information from external sources, is not set up in a scalable and efficient way, being able to provide new data requests required with short lead times and at a competitive cost.
AI tools are changing customer service automation in extraordinary ways. For example, Clara, the chatbot developed by Helvetia, elevates customer interactions with intuitive and automated conversations. Insurers are also leveraging AI to process images and videos from damage reports, enabling rapid and accurate assessment of damages. However, the impact of AI goes beyond automation. It also addresses the challenge of unstructured data. Unstructured data often hinders seamless integration with insurer systems, reducing efficiency. And its Bamberg Input Center, SPS, challenged this issue by processing approximately 300 million inputs annually, transforming them into structured data that insurers can easily integrate into their workflows. Christian, how have advancements in AI transformed input management for insurers? And what challenges still need to be addressed to fully optimize these processes?
So technologies for classifying unstructured input as well as capturing and verifying relevant content, be it from emails, portal uploads, or hard copy mail, have evolved quickly over the past 5 years. AI is also a key driver of this as well. And this journey for sure will continue. So without constant market screening and experience in testing various technologies, insurers will not be able to feed their AI projects with the data they need, or they will pay substantial premiums for it, putting business cases under pressure and limiting the potential of the AI journey. Despite all those technological improvements, we do still see the need for manual quality assurance to guarantee the data quality levels needed to allow for process automation, which at the end means automated claim settlement. With the growing demand for high quality data, the need for quality assurance will grow as well. So input management operations that deliver all those manual tasks from an on-site location in high-cost countries, such as Germany, do not leverage the potential from near or offshoring. They are paying substantial premiums for the data stream feeding into their AI algorithms as well. Outsourcing providers such as SPS, combining scalable platforms, technological expertise, and innovation, as well as operational levels like state-of-the-art near and offshore centers, can help transforming the input management function into a powerful enabler of successful AI programs.
Changing topics, fraud is a major concern in the insurance industry. How effective is AI in detecting fraudulent claims, and what advancements are on the horizon for fraud prevention?
Well, as I mentioned before, AI can identify fraudulent patterns much better than the most experienced human operators. And the main challenge we see in this field is that AI technologies also enable fraudulent practices by using AI to create fake images or descriptions, police reports, invoices, or anything else. So without AI that constantly learn and evolve in line with the fraud industry, that will improve their techniques with increasing speed as well, claims cost will grow without limits. Human experience and operators to handle fraudulent cases will be required rather more than less, but without the smart technology identifying relevant cases to dig into, they will run out of work quite soon in my view.
Okay, and what roadmap should insurance companies follow to prioritize their investments in AI?
I cannot give a general advice on what is best prioritization of use cases, of course. This is really an individual decision, considering the specific client base as well as the technology stack given and also historical data available. But as I said before, I highly recommend to carefully decide what parts in an AI transformation journey should be sourced from external partners, because this can save money in the long run as well as reduce the investments needed. Furthermore, AI investments can only be as beneficial as possible when new tools are well connected to the existing legacy IT and external data input. Failures on one of those two preconditions will negatively impact margins from all other investments in AI, and those aspects should therefore be prioritized.
Okay, I see. And following that idea, at what point can a company structure impact the successful implementation of AI solutions? And how can insurers manage the necessary skill and mindset changes needed to work effectively with AI?
Like in all other traditional industries, an AI transformation requires a huge skill and mindset change on all levels of an insurance organization. And this is not a short-term project, it's rather a constant challenge that needs attention. In our survey, we learned that successful AI programs address this in 3 different ways. First of all, the organizational setup and structure. So decentralized and interdisciplinary teams, so bringing together data scientists and process owners or domain experts in their daily routines, can generate much better outcomes than siloed organizations. The second point is qualification. So domain knowledge is really critical for data scientists and as well as AI developers, so that they are able to fully understand the use cases they should find adequate solutions for. And on the other hand, the domain experts, for them it's really helpful to understand capabilities and limitations of the technologies used. And last one, communication. So there's fear from negative side effects of change. Yeah, for example, job losses and other things. So it's important to emphasize the positive impact, such as improved client satisfaction or supporting operational units, and let their expert resources really focus on client communication as well as feeding AI models and verifying the output of those.
Thanks for that, Christian. This is the last question of the episode, and I think this is a really great one, which is, what are the future trends for claims management?
Let me give you 3 examples where I see AI to further transform claims management going forward. The first one is virtual assistants. The way insurance companies communicate with their customers will evolve. With the integration of generative AI, conversational interactions will become the norm. Customers will increasingly interact with AI-powered systems that are able to have natural and context-based conversations. So this technology will improve the customer experience while increasing the efficiency of the communication processes. Instead of a customer filling out a form or editing a PDF, as it is today, they would speak to an AI-powered chatbot to report the damage. The chatbot then would ask targeted questions, clarifying ambiguities and ensuring that all necessary information is recorded. It can also ensure that the information is complete by asking questions as they are necessary until all the data is complete. So the second one is AI integration in IoT, Internet of Things. So linking sensor data with AI-supported analytics, insurance companies can monitor damage in real time, basically, and also respond to it early. For example, sensors in buildings or vehicles could detect potential risks, such as water damage or technical defects, and transmit the information directly to the AI system, which then automatically initiates appropriate countermeasures. And the third one, real-time analysis and predictive modeling. Probably my favorite one. So, predictive modeling enables insurance companies to respond proactively to potential losses by identifying risks early and taking actions before a loss occurs. This technology will take loss prevention to a new level and further increase the efficiency of claims processing. First examples I have seen in the context of using weather predictions and GPS data for an alerting mechanism. An insurer, for example, has sent vouchers for nearby underground parking to clients driving in an area with a short-term hail forecast.
Well, that is so great. I understand now why this is your favorite one. So thanks for that, Christian. I'm afraid that this was our last question for this episode, so thanks a lot for your collaboration.
Thank you very much, Miguel.
So thanks for all listening at home. I hope you enjoyed this episode, and I invite you to subscribe to our podcast in Spotify. Thanks for all. See you in the next episode.
What they were able to do is now in minutes, sometimes 15 minutes, fully adjudicate that life insurance claim while they have the person either online or on the phone, because we're reading all the information. If anything's missing, it notifies right away.
I think what we see today with the evolution of large language models, this is just a glimpse of what is actually possible in the future.
The Power of Possibility, a podcast from SPS.
Welcome to The Power of Possibility. In today's episode, we'll talk about Intelligent Data Processing, or IDP, a transformative approach that's helping businesses improve efficiency, reduce processing times, and elevate customer satisfaction. According to IDC, by the end of this year, 80% of the world's data will be unstructured, presenting huge challenges for businesses. Enterprises will need to rethink their strategies for data management in order to take advantage of their full potential. IDP has been already rising to meet these challenges. It's cutting manual workloads, automating processes, and even driving growth. We'll hear it from our expert guest today about real-world applications of IDP and its role in industries ranging from banking to insurance. So let's dive in and see how IDP is reshaping the future of businesses. So today we have here Christian Schejot, Global Head of Business Solutions in SPS. Thanks, Christian, for being here.
Yeah, thanks for having me. Exciting to be on this podcast episode on IDP.
And also we have here Adam Field, Global Head of Product Management at Tungsten Automation. Welcome, Adam.
Thank you very much. I'm really excited to be talking to you today on this podcast.
So, Christian, to kick things off, could you explain what intelligent document processing is and how it fits into the broader context of data processing?
Yes. IDP, or intelligent data processing, is all about digitization of data and documents. Especially, what we see today, physical documents, but also digital documents that come in the inbound processing of companies. So actually what we're talking about is mainly the classification, the extraction, and the processing of especially unstructured and semi-structured data. The I for intelligent it comes really from the combination of ordinary technologies like an OCR, what we know for quite a while, but now in the combination with cognitive elements, for example, for with natural language processing, or even now machine learning or generative AI, it really becomes a new dimension of document processing. I would say that especially the structuring of this data is a key functionality of the IDP technology, and it really focusing on analyzing and interpreting data flows, and by this facilitating to the decision-making process of companies, which is very important, becomes even more important in the future.
Okay, thanks. Adam, from your perspective, how is the landscape of document processing evolving, and what role do you foresee for intelligent automation in the next 5 years?
Sure. Well, I think it's really interesting because intelligent document processing, or IDP, has been around for a very long time. But just in the last few years, I think the first thing we need to do is define exactly what it is, because I think intelligent document processing generally, the definition has expanded. In fact, the term might not even make sense anymore because it's about more than just the documents. Really, what organizations want to do is make sense of all the information inside of their organization and automate what can be automated, regardless if the document is at the center and starts that automation or is just an asset as part of that overall process that they're trying to automate. So I think IDP used to be a lot about just maybe taking data off of forms and doing data entry into another system, and then moving that information somewhere else and processing it somewhere else. IDP is really expanded, where now I think it involves case management and workflow and RPA and a user experience across different channels, and also moving beyond the document, meaning being able to process information regardless of where it lives, inside or outside of an organization.
Thanks, Adam. Christian, many businesses see IDP as part of a larger trend in advanced data processing. How has data processing evolved over the years to meet the growing demands of modern businesses?
I think that's a good and valid question, right? I mean, it goes back a couple of decades. I remember when I started my career in a bank, and they had all this computers, right? Which is, I would say, the early stages of data processing from a technology standpoint. But it really took off with IBM Watson now nearly 10 years ago, I would say, over to robotic process automation, RPA, where I know that, we as SPS had a couple of bots implemented for our clients to help them automating the data processing. And now, if you look where we're standing now with really this natural language processing and generative AI technology, this evolution cycles get shorter and shorter over time, and will enable us doing more and more with these technologies, right? So looking from automating simple manual tasks, typing data from one system into another system, and seeing now what you can do with modern technology, not only automating very simple manual tasks, but even highly complex tasks like decision taking is a huge step in the evolution. And I'm pretty sure that in the near future there will come more and more of more complex tasks that can be automated.
And what kinds of inefficiencies or redundant tasks do business typically face? And how does intelligent data processing address them?
I think that when we look into companies, there is a lot of manual data entry still. Be it that I have to take out data from forms into my system, reading lengthy emails or letters and compiling data out of it, or handovers of processes in document handling. But also siloed data, which is slowing down really the decision-making process. So I really see a lot of tasks which are redundant or highly inefficient, and that's what we're focusing mostly at SPS on, is really to automating this repetitive task, reducing the handling errors, and by that also the cost. But also to scaling easily to handle increasing document volumes, which is still the case when you look especially into insurance companies, for example, in the health sector. It's not really seen yet that we have a massively declining volume of physical documents or electronic documents that are scanned and come into our clients.
Okay, Christian, you've mentioned the concept of unstructured data, which is becoming increasingly common and presents challenges for businesses. Could you explain a bit what unstructured data is and why managing this data chaos is so important for companies?
Unstructured data, and everybody knows that of us is if you just write a letter to your telco provider, for example, if you write emails to them, usually every form has somehow a free text field in the form where you can put in a comment or a handwritten request. That are all the fields that are very difficult to extract and to read out information, because everybody can just type in different kind of information. But on the other hand, this is especially those free text fields or emails or letters contain a lot of useful or needed information that I have to extract from those documents. And that makes it especially hard and challenging to work with those free text and unstructured information.
Thanks. Adam, expanding on this, what unique challenges do industries like BFSI and healthcare face in managing unstructured data, and how does Tungsten address them?
Sure. Well, unstructured data itself is an interesting term because when I talk to business people, of course, IT people fully understand what that means, but when I talk to business people, sometimes, we spend time defining what is that. And so if I were to say, what is unstructured data? Typically it's been information or data on a document that isn't formatted in any particular way, just free form text like a paragraph. But that definition itself, once again, is expanding because if you think about all the information that an organization has about a customer, those could be transcripts from audio files, video files, social media posts, other public information like news stories if you have to do background checks. And no one knows what kind of format that's going to be in. And then that helps, I think, set the table for, okay, what is unstructured data? And now that we define it, I think what's really unique about what the Tungsten platform provides is on one common platform, you can do that intelligent document processing that we talked about a moment ago. You can do full process and workflow automation. And then it has many AI capabilities like document AI, generative AI, decisioning AI, knowledge bases, AI agents built right into it. So we just look at unstructured data alongside any other kind of information, use the right technology to elevate it so that humans and machines can make sense of it, and then try to automate what we can inside of your organization and bring humans in the loop as necessary.
From your point of view, Adam, what are the main problems that companies face when they come to you? What challenges are they dealing with?
Sure. Well, it's going to vary a little bit depending on the industry that the customers are in. But generally what they're telling me is the amount of information coming into the organization is growing faster than they can handle it, faster than they can implement IT projects. Their budgets have already been cut. They're looking for strategic vendors that can do more than maybe what they asked them to do in the past. And essentially they have to do more with less. Customer expectations have grown. And so they need to get the right answers to the customers. They need to process things in a very efficient manner. But the challenge across all of that is they have to do it ethically. They have to do it compliantly. And so there's some trust that goes into the technologies that they choose to do all of this. So, it's a big challenge inside of organizations balancing great customer service and automation, and now add the use of like AI and generative AI. And can they trust it, and how should they use it, and where should they use it is a really big challenge right now.
Christian, shifting to industry specifics, industries like BFSI and healthcare are heavily data-driven. What's the current state of data processing in these sectors, and what unique challenges do they face?
Yeah, that's a very good question. I think that first of all, which is for the entire BFSI sector in common, is that they are heavily regulated, especially when it comes to customer data. I mean, we know that from the banking industry with banking secrecy. We know that from the health sector with patient data, for example. So this is always a critical point when you deal with that industries. And another challenge is, and I would say that is also very common for the entire industry, is really staying on top of the huge amount of data the companies collect throughout their customer interactions and through their operational processes. So they have a huge amount of different data they have to deal with, they have to interpret and take business decisions on. And then you have more challenges which are specific to certain industries, like the banking, managing the fraud detection and compliance reporting in the area. Healthcare, I said it's if you deal with insurance claims, with patients' data, very sensitive data, and I think that's quite a challenge, especially when you want to partner with external service partners to give out such highly confident and sensitive data.
Okay. Could you share an example where intelligent data processing turned a data challenge into an opportunity, perhaps improving customer satisfaction or operational efficiency? How does SPS provide solutions in this area?
We have a couple of those examples at SPS. I think the latest one is with our SPS GPT platform, which we developed back in December 2023, when this entire Gen AI hype came up. We developed a loan application process for one of our clients, where we really shorten the application time for a private loan. Very much easier for our client to handle those loan applications more efficiently. So overall, you have a better quality of the entire process. The process and the loan approval is given much faster to the client, and so is the payout to the client in the end. And that really is a good example how we serve our client, in this case a bank, to save costs on the one hand, to increase the quality of the process, but also on the other side to help the end customer getting the loan in much faster time.
Okay, thanks for that, Christian. Adam, could you share a specific example where Tungsten automation helped a business overcome a significant digital workflow automation challenge?
Yeah, sure. I'm happy to share a few. Couple examples come to mind. One is a very large bank, and if I said the name, you would definitely know who they were. They're doing their full mortgage processing in Tungsten. So this bank operates in a very large country with a large population in a very competitive mortgage environment. So they've cut processing times for mortgages from days, sometimes weeks, often down to minutes. And what's interesting, I think, about this use case is the information that they're using to process these mortgages can come from documents, but also information from other systems. Still, their process involves often customers or prospective customers walking into a branch and handing some income documents and other paperwork to the person at the branch. So they're scanning them right in the machines at the branch. So regardless of where the information comes in, there's a centralized process in Tungsten that takes care of that. And Miguel, to my point earlier about sometimes it starts from a document and sometimes it doesn't, you don't know where, especially today, your customer is going to initiate this work. Maybe they walk into a branch, maybe they go to your website, maybe they walk into a broker. It doesn't matter. It doesn't matter where it starts, what type of document it is. We're processing all of that information, integrating with the other systems they have in place, and then automating the decisions, because the quicker you can do that, then you're likely to lock in that customer. But if a human does need to be brought in to make a decision, we're doing that quite seamlessly. So it can always be tracked by the customer and by the bank. So that's one example in banks. So sometimes days or weeks down to minutes. There's also a really big insurer. I was talking to the head of their digitization operations the other day, and she told me a really interesting story that, sometimes, Miguel, we get so wrapped up in our day-to-day work and the technology, and you forget about sometimes the human story behind some of this. And they're using Tungsten to automate their life insurance claims process. Now, you can imagine when a loved one dies, someone has to pick up the phone and call the insurance company to make a claim on their life insurance. And that can be a very difficult time. Well, what they were having to do is these people that were processing their claims, while they're trying to be empathetic, they're also having to tell these people that it might take days and days to get this stuff processed because they need the paperwork. And if the paperwork's not right, they have to pick up the phone and call back. What they were able to do is now in minutes, sometimes 15 minutes, fully adjudicate that life insurance claim while they have the person either online or on the phone, because we're reading all the information. If anything's missing, it notifies right away so that you don't have to call a person back and remind them once again about this horrible situation that they're dealing with. And most importantly, they are able to get the customer their money sometimes, within minutes. So I think that sometimes is the human element of what we do that we often forget about because we get so excited about the technology.
Thanks, Adam. It's good to know this perspective from the customers. Christian, how does data processing impact customers' everyday experiences, in your opinion, particularly in sectors like banking or healthcare?
I think with every interaction you have with a company, be it in the healthcare sector, be it in banking, be it in insurance, is always relying on data, right? I mean, when you have an insurance claim, for example, I mean, you send over data to your insurance company, be it in an email, be it in a form, be it in a call, right? I mean, nowadays calls are recorded. You can take out the data. Speech to text is a keyword here, or be it in the banking area. I mean, if you want to apply for a loan, it's always about the amount of data and how you provide the data to the bank. I mean, with a loan, for example, everybody or most of us at least know that what you need in terms of documentation to get a mortgage or to get a personal loan from a bank. So it's always a matter how you transmit or you are able to transmit those documents and data to your bank that they can efficiently process the data to get a fairly quick result in the end.
Okay, well, I guess that maybe adopting new data processing solutions can bring some risks. What are the most common ones, and how can businesses safeguard themselves?
I think there are two sides of it when we talk about the risk. I think the first of all, it's a cultural question in organizations. I mean, the people must be ready really to think process differently, especially when you have very new technology like now with large language models, where you have totally different possibilities to build a operational process. So organizational resistance is one significant risk really for failure of such technology. The other thing, I mean, there's obviously the technical obstacles you have, where we have the risk of the data quality, misleading interpretation of data when you look on the data side, but also data security and privacy breaches obviously is a big question, especially if you have pre-trained or constantly trained systems. And therefore, I at least have the hope that with the European AI Act, that we get some clarity on that when we implement such solutions, that we're really on the safe side here from a compliance perspective.
Okay, thanks for that, Christian. Adam, if you had to predict, what groundbreaking advancements do you think will redefine IDP by the end of this decade?
By the end of the decade? Well, who knows what's even going to be by the end of the year as fast as things are moving. But if I had to say, in the next 5 years or so, I'd focus on a few things. One is democratization. And by that, I mean the democratization of both technology and insights into information. So with generative AI, and we rolled out here at Tungsten Automation in early 2024, we were one of the first to bring to market a Tungsten Copilot based on generative AI and large language models. And it helped democratize a few things. One is development time. So what I see over the next 5 years is low code has been around for a long time, and that's slowly going to be replaced by just prompting. So we're going to just build software using natural language, using our voice. And we rolled out a Tungsten Copilot that does that. You can just type in any language and it'll build workflows and screens and business rules based on context. Similarly, you can build your document extraction models. Now, instead of having to do scripting or drag and drop, you just type prompts and it determines then what to go extract from a document, regardless of the format. So training time goes down. So that's the democratization of technology. And then on the other side, more of a business-focused runtime angle to this is the democratization of, I think, information insights. So we also rolled out another Tungsten Copilot called Tungsten Copilot for Insights, which gathers information from documents related to a case that's being processed and information from elsewhere in the organization. And just with some prompting, within seconds, I can get insights into that data that would have taken humans hours and hours to do before. And so I think that's, so if you ask me, over the next 5 years, what does that mean? I think that just makes people more productive. But with that comes a little bit of fear, right? So people are fearful. They hear about AI, they hear about Gen AI, and they're fearful that it's going to replace them. And I heard a great quote once that I wrote down and I use a lot, and I think this will be important over the next half decade, where it says AI will not replace you. Someone who knows how to use AI better than you will. And I actually think, in 5 years, it's not like we're just going to be sitting still doing nothing and computers are going to be doing everything. Jobs have continued to increase even as tech innovation has increased over the last 40 years. So I think it's just going to make us more productive. It's made me more productive. I started coding again. I haven't coded in 20 years and I've started coding again. And so I think it's going to take the mundane work. People will realize that they're not going to be replaced, that these things are assistants to help them do their jobs better and make them more productive.
Okay, thanks. What about you, Christian? If you could peer into the future, what do you think data processing will look like in 5 years? And how will it transform businesses and industries?
I think what we see today with the evolution of large language models, this is just a glimpse of what is actually possible in the future. I think that we will see much more efficient data handling, data management processes, especially for unstructured data. When I see what we are able to do now already in our service processes, in the telco industry, in the banking industry, I think that the handling and the management of data in our day-to-day processes will fundamentally change, and also the skills we need for data management will change. I think that we will see more skills in the area of handling and maintaining a new technology throughout the entire process than what we have today with agents that sitting at a desk serving end customers or dealing really with applications for loans, for example, onboardings or claims.
Last question, Christian. What advice would you give to companies looking to invest in or optimize their data processing strategies for growth and efficiency?
Yeah, looking back on the last couple of years at SPS, we gained a lot of experience in developing new ways of data handling, data management, or document processing. And I think the key takeaways, at least for me or for us as a company, is really to start small, focus on high impact use cases, demonstrate quick value, and not trying to change the world at once. Another thing is really to prioritize security. Choose providers with strong compliance capabilities, which are proven in the market. And last but not least, and collaborate with experts who really know their stuff, who have experience for a long time and can demonstrate that also. I mean, at SPS, we leveraging experience for really to design tailor-made solutions, and that over the last 2 decades. So that would be my advice, really, to look out for partners who demonstrated experience in the market for a long time.
Yeah, great advice. Thank you, Christian. Okay, that was the last question of the episode. Thanks, Christian and Adam, for helping me with this episode.
Thank you very much. Yeah, it was exciting to be here.
Thank you very much. My pleasure.
Okay, so it's time to thank our listeners. Thank you for tuning in into the Power of Possibility. We hope today's episode has inspired you to explore how IDP can change your business. So don't forget to subscribe to our podcast on Amazon, Apple, or Spotify to stay updated on more inspiring episodes. Until next time.
The Power of Possibility, a podcast from SPS.
Welcome back to the Power of Possibility, the podcast where we dive into the strategies that businesses are applying daily to drive growth, efficiency, and innovation. And today we're focusing on a very important shift happening in the banking, financial services, and insurance sector, which is the evolution of strategic outsourcing. And what used to be viewed only as a cost-saving measure has now become a key driver for innovation, compliance, operational efficiency, and enhanced customer experience. To explore this transformation, we have two experts guests with us today. We have here Ronak Doshi. He's partner at RS Group. He's a thought leader in BFSI, specializing in business process services, digital transformation, and financial services strategy. He will share his insights on the latest trends shaping outsourcing decisions in financial institutions. Hi, Ronak.
Hey, Miguel. Thank you for having me.
And we also have here Michael Newberg. He's the head of global service line of BFSI at SPS. He brings deep expertise in financial service operations, outsourcing strategy, and IT-driven transformation. He will walk us through real-world examples of how strategic outsourcing is improving efficiency and customer experience for banks and financial institutions. Hi, Michael. I'm glad to have you back in the podcast.
Hi, Miguel. It's always a pleasure, and it's a pleasure to have the honor jointly with Ronak today. So looking forward.
Perfect. So in this episode, we'll discuss how outsourcing is evolving beyond cost cutting, also the role of AI and automation, and regulatory challenges, and also a very important thing, which is what the future holds for outsourcing in BFSI. So to start with the first question, I will say a question to both of you. You can take the lead, which is how has the role of strategic outsourcing in BFSI evolved over the last decade? So maybe Ronak, you would like to go ahead.
Sure, happy to. So if you look at the evolution of outsourcing in financial services across banking, capital markets, and insurance, the first wave was all about location and cost arbitrage, right? You were able to do certain activities in areas and locations where you were able to kind of get that cost advantage, as Miguel you mentioned. And then it suddenly went into there's an arbitrage of talent, there's an arbitrage of technology, there's arbitrage of process understanding, and all of those combined are now getting much more strategic advantage to outsourcing, and it is across run the bank, change the bank, and manage the bank, right? So we're talking about how do I run the bank more efficiently, how do I make sure my products and experiences are delivered on time, we keep systems upkeep to a great level. So that's where we want to make sure the business is moving at the speed it should be. But then change is important, right? There are new digital technologies coming in. You want to talk about AI, data, cloud, compute technologies. How do we make sure we are infusing those in the processes that we run as banks becomes the second stage. And then manage, right? We want to make sure we are staying compliant, we are staying secured, we are staying resilient, and we need the outsourcing support to do that. And that's where we've seen overall outsourcing has evolved from not just being about the run the business piece, which is more of the cost arbitrage and efficiency play, but also change, which is driven by all the digital technologies, and manage, which is about how do I drive better outcomes on the compliance and resiliency initiatives that these organizations need to run.
That's very interesting. I think I can add in what Ronak said. Yeah, so we see clearly the increase of outsourcing as a strategic lever for companies and banks. And if you look, for example, the European Central Bank here in Europe is collecting an outsourcing register. They started it in 2022. And their latest report was from February 24. So I'm expecting the next one to be released rather shortly. Yeah? But looking at that, they highlighted as well a clear increase of more than 20% from 22 to 23. Mainly IT still, and I think that's what Ronak highlighted as well, but as well going to back office and admin services. So there's a clear push. Yeah, and not only then to onshore locations, but as well, roughly 20% have been, or 22% exactly, according to the ECB report, are going and offered as well from non-EU and other countries. Yeah? So I see there we see as a proof point as well what is happening in the banking industry, to see that as a strategic lever.
Okay, can you summarize what could be the key trends of right now driving outsourcing decisions in financial institutions?
So as we look at the key trends, we do a key issue survey with our customers. So we get almost like 300 to 400 respondents who talk to us about the drivers of the outsourcing, how they're looking at budgets and their vision for the future. One of the things that we've seen is, if you look at the major drivers for outsourcing, it still stands as that the first one is cost and efficiency. It is not going to go away. The second is access to technology and other capabilities that, which they may not have access to at the right scale. The third is talent. There's a bit of a talent supply gap, which we've seen over the years. It's getting better, but again, that becomes the third driver for it. The fourth is also about how do I get global capabilities being infused and getting 24/7 round the clock upkeep of systems, of processes, of my customer channels and other things. So that becomes also another driver of using outsourcing and offshoring also more strategically. So those are the major drivers at the business priorities level. But if I have to abstract it one level further, as you asked, it's about the operating model shift of these organizations. If you look at a lot of what we were talking about as banks of the past was about, hey, we are looking at each of these as individual functions. I'm looking at contact center, workplace, infrastructure, application development as individual functions, and doing outsourcing for each of these and trying to be better at these individual functions. Now we are talking about the operating model being geared towards products that we are delivering, experiences that we are delivering, or value streams that we are running. And how do we make sure that these are driving the business results, or OKRs, right? Objectives and key results of the business that you're looking at. So, how do I make sure my technology, operations, and the outsourcing that I'm doing around it is delivering on those outcomes for the products or experiences that we are delivering? So this operating model, which is more of a product operating model, or we call it as a value stream operating model in insurance and capital markets, how are we driving alignment towards that? So that is where we are seeing outsourcing evolving significantly, which is this push, right? This push towards operating model design and shift towards bringing the technologies to drive that outcomes.
Yeah. So I think outcome indeed is key. So it's all about customer experience. That's where we see a clear shift. And then Ronak is nodding. So definitely that's changing. Yeah, not looking only at pure costs. It's how can we drive what you said, Ronak, with value stream and the value proposition. So it's about driving customer experience, gaining customer satisfaction, and gaining growth by getting customers on board and changing the outcomes. So that's clearly what we see as well. There was a survey from the Handelsblatt Research Institute just recently last year as well, highlighting that as well. So the one major part beside cost is clearly digitization, innovation. So driving that, but as Ronak, what you said, shortage of skilled workers and experts. I think that's clearly a huge issue. So as you see, for example, in Germany, they expect to 2030, 30% of the population of employees will go to retirement. So plus it comes up that due to the topics AI, what Ronak as well talked about, the skills are shifting. Yeah? So you need other skills, people need to transform. So that is definitely driving the key decision maker as well when it comes to outsourcing, the skill shortage, customer experience, and digitization. Yeah. So
yeah,
much more than costs.
Yeah, and I agree. And we've seen, I can give you one example, Michael, that will be interesting. So we were talking about customer experiences of the future with one of our clients in the US. And they were talking about how most of the segmentation of customers were done based on demographic elements, which is, okay, how old are you? What income do you make? Which location do you live? And all of those. And you were able to run, outsourced engines at high efficiencies, looking at those parameters. But then what you realized is you have a lot of green on the outside on these outsourcing vehicles on customer experience transformation. But if you look at under the hood, you see a lot more red, right? Because it's green on all the efficiency metrics to drive engagement with these demographics. But you realize the customer experience scores or the overall growth and the customer lifetime value, those are parameters starting to hurt. So your outsourcing parameters are great where you're getting measured them, but your outcome parameters were not great. And they said, oh, we need to rethink outsourcing and offshoring to not look at demographic segmentation, but psychographic segmentation. Psychographic is there can be two people both living in New York City, making six income figures, but they could be very different people. One could be a beach person, other could be a mountain person. One loves to eat indoors, the other loves to go outdoors, and one is a dog person, other is a cat person. So you'll realize your messaging, your experiences, and all of that has to be designed for that. And we are seeing outsourcing evolve into that. All the suppliers in the market saying we'll build dedicated data capabilities, analytics capabilities, and will bring that along with the right talent to help you ship toward that with the right design thinking tools and methodologies to build those experiences. So we are seeing outsourcing becoming very closer to the business, and it's not just two levels below in terms of the individual parameter efficiencies if you are driving.
I have a question regarding the approach. How banks and financial institutions are changing this approach to outsourcing?
Yeah, at least in my experience, there are a few areas where they're changing this approach. One is the entire sourcing approach, which is who do I work with? How do I work with them? And then how do I contract with them? So that becomes very critical. So gone are the days where you want to do these expensive, large RFPs and getting, immense amount of data from each of the individual suppliers and then trying to, do a weighted average and mix and then trying to find who's the best one, because then eventually all the decisions are around price because cost becomes so critical. So instead of doing that, we are starting to see models around co-sourcing, co-innovation. Let's sit together, our teams together, as we are designing this product operating model. We are all aligning towards the common OKRs, and let's work towards designing a solution around that. So more co-innovation, co-sourcing is where we are seeing. So more hackathon-based hiring, right, and pod-based model. So that is where we are seeing a bit of an approach change. In terms of the contracting, then the conversation is it cannot just be a price-based model or an FTE-based pricing. You have to also think about output and outcome based or a gain share or a risk share basis, because as outsourcing becomes strategic, you can't just talk about the cost, you have to also talk about the value. So contracting for value is becoming important. So instead of talking about service level agreements, we are talking about experience level agreements. How are you driving the experience outcomes and how do you work with together in a manner that is more productive? So we've seen those changes happening quite a bit. So this involvement of business and IT leaders along with the procurement teams to make this change happen is something that we are seeing in pockets. It is not happening broad based. I see elements of it in places, but it's in the right direction.
Okay, what do you think about it, Michael?
Yeah, I can only agree. So it's shifting customer experience, as you rightfully said early on. That's the key. So it's about the output. It's about how the result is being delivered and what can be changed. It's not about costs being measured, but about end-to-end view on the process and on the result that is going to be delivered, on the quality, on the customer experience, on the customer satisfaction. So this is much more important. And what Ronak said as well, it's about strategic topics. It's not only short-term focused. What I see as well, that companies are looking for partnerships on a more longer lasting journey on this transformation roadmap that we are on at the moment.
I wanted also to focus on how outsourcing is related with digital transformation. What's the role of it in these companies? I mean, how, for example, how these companies are applying outsourcing in order to integrate AI and automation strategies. What do you think?
Yeah, and I can go first, right? So, Miguel, as I think about digital transformation, as you mentioned, right, it is about uh, changing the way we work, driving innovation in the work, and driving better outcomes, right? So, it's the new ways of working as well as innovation in the way we, do the work. And that's where we've seen technologies being used, right? So, as you mentioned, data, AI, RPA, cloud, and several other technologies based on the requirement of that need of the. So, at the crux of it, the everybody's trying to infuse a lot more of data and intelligence into the processes they run. They want to infuse AI intelligence to drive the outcomes on the processes, where this process could be help me hire people better, faster, right? Be it an HR process, help me to close new loan accounts, right? So do originations better, right? Or help me to resolve customer queries faster. Or it is about help me keep my systems up right again so that I have 99% or 99.99% availability, right? So those are the pieces where you want to drive those outcomes on those processes, and then you're using data to measure them, make it better, bring the tools to kind of infuse that intelligence. So we are seeing digital transformation is all about that. It is a continuously iterative process to make the outcomes come faster. So this is about speed, and then this change that you are driving at speed, right? So the velocity of change is what becomes most critical when we are talking about the role of outsourcing and digital transformation, because banks and say insurance companies could do this on their own, but the speed that the external force allows you to get is what you're looking at it, right? The outsourcing partners are bringing experience of having seen this with other banks. They're bringing talent. They're doing investment in R&D. They're bringing partners. An external force helps you to make the change faster. And I think that is where this resonates really well, Nitni, where you put outsourcing and digital transformation together, because they really go in unison.
Yeah, I like what you said, Ronak. Yeah, it's all about speed, and I mean, what we see at the moment, the speed is really breathtaking. Yeah, what we see in the domain of AI and all that things. I mean, there are always these discussions: shall I do it on my own, or shall I outsource, or what do I do on my own, or shall I outsource? But I'm a strong believer that if you try to do everything on your own, yeah, you at the end will fail because it will take you too long. Yeah, so it takes too long. What Ronak highlighted as well, the variety of topics of digital transformation are so broadly, starting from the front end, the experience on the web, on the mobile, driving hyper personalization, analyzing data, up to back office processes and all that stuff. So if I want to do everything on my own, it will take me years. But I do not have years because competitors will do that rather quickly. I mean, just look at what happened with DeepSeek and all the others. Yeah, so even they're already in a very quick and fast domain. So that's clearly what is driving outsourcing as well, is the speed of innovation, paralyzing activities. Yeah, so not doing each mistake on your own, but getting a partner who has done the learning curve already. Yeah, who is as experts, as Ronak rightfully said, war of talents, we talked about it, yeah. So choose your battles, choose your topics, and then choose the right partner to speed up the digital transformation. Yeah, so that's clearly a driver that we see for outsourcing, and how this connects with the current developments we see in AI and technology.
And both of you mentioned some pain points and use cases that are being applied in the banks, but I would like to know which could be what could be the key processes in these companies that are best suited for outsourcing today.
So I think from my point of view, Miguel, you can't say, well, that's the department or that's the area you should outsource. It depends a little bit on the maturity and the strategy and the positioning of the respective company. Generally said, I think we're coming from history. IT was a clear focus point of outsourcing. Yeah, like Ronak said, with run the bank or change. Now it's going over to change the bank, doing the transformation. But as well, from my point of view, it's IT, it's back office. So going down to operations. So more or less the whole chain.
And it even gets more and more important from my point of view, as if I look down the value stream, if I look from an end-to-end process perspective, I'm not looking at that part of the IT or that part of the process. I'm looking at the end-to-end process. So for me, there's no clear answer to say it must be, I don't know, securities, or you need to outsource payments. So it a little bit depends where you have your experts, where you have your focus, what's your go-to-market proposition, what are your pain points from banking point of view, and then you need to align the best fitting operating model jointly with the outsourcing partner. That would be my answer. At the end, it's broad, and it goes from IT to operations. So the whole value chain. So Ronak, it'd be interesting if you see the same, or what's your experience when talking in the market?
So, Mehan, I would say yes, there are the areas where functions where we have large volume of scalar work to be done, and definitely talent becomes a challenge. So, IT definitely becomes one where we see a lot of activity from everything from application development to support to testing to managing the infrastructure, helping run these securities operation center, network operation centers. I think this does require very specialized capabilities, right? Running a SOC is not a core competency for an insurance company, right? So that's where you get the right experts from the security worlds, which are doing R&D continuously on the challenges that is happening in the world, right? So those definitely are areas where we see, and then it moves into functions of businesses, right? So be it say processing, right? So origination processes across mortgages, right? Across cards and payments and banking and all of those, to servicing them, to doing all the back office reporting, compliance, are areas. We've seen a strong spike in the compliance world. So financial crime and compliance as a whole, we have seen a bit of a spike in terms of the volume of outsourcing. And I think that is a area where, as the transactions become more digital, you start seeing the attack and the sophistication of fraud and attacks on the banks also increase, right? So that is where the compliance mandate also increase. So I would say those are the areas where we are seeing growth. And then definitely data as a whole, given you need the data playbook for AI, for automation. So we are also seeing a lot of activity around data in terms of outsourcing.
Given the highly regulated nature of BFSI, what compliance risks do companies face when outsourcing?
Yeah. So as we look at in terms of compliance and the risk that the companies face, there is all these financial services institutions have a third party risk management function where they're looking at the financial risk, the legal risk, the technology risk, and other brand risk of working with a supplier. So if there are challenges with the supplier, it also reflects bad on you because you're working with them. So you have to make sure that their brand is additive to what you are doing and should not be going against common values. So I think that becomes important. We also see elements of location risk, because what if you are delivering services from a location which has certain geopolitical challenges, certain other issues that can comes up. So those are also challenges that are risk that you look at when you're outsourcing. And these need to be balanced really well, right? So we've seen sophisticated models being built just to look at all of these different risks when you're doing outsourcing and the suppliers that you work with. And it is not an individual supplier risk, it's the portfolio that you then have to start managing, right? Which is, you would want to, you will always want to work with challengers in the market, but then also at the same time, you want to balance the risk in terms of, hey, you don't want to work with somebody who has a huge amount of financial debt, and then you realize that could be a risk of continuity of the supplier, and if the supplier doesn't continue, you have risk on your business continuity. So those are the things that becomes very critical when you're planning business continuity or disaster recovery, and those principles when we come to specifically around IT.
Michael, what do you think about it? How do we ensure that outsourcing solutions align with evolving regulations?
Yeah, I think that's clear. You need to comply and align with all these regulations, besides the risk measures that Ronald rightfully mentioned. Yeah, so you need to align with Fed, with BaFin, and with FINMA, so with all the authorities. And I think well, there are clear processes defined when working with respective vendors or outsourcers. Yeah, so meaning there's a close alignment on latest regulations and because the goal is as well to adapt that for multiple customers. So I think that's even advantage when outsourcing, partially because uh, all these regulations are coming with costs, and normally the customer is not paying for it. So the private customer for sure, yeah, because he just assumes that everything goes right. Yeah? So even regulations, even if you're not outsourced, that might hit you. If you outsource, then this can be even an opportunity to leverage it, to scale the cost that you have. Yeah. You need experts that are always up to date, as Ronak said as well. There are departments to monitor you. There are good contractual agreements, SLIs, KPIs, OKRs that Ronak said. How it's going to be measured that you comply, that it's fine, and then for sure you have as well opportunities like certifications, audits, reviews, external reviews. Even as a bank, if you outsource, you always have the right to audit by your own, yeah, on top of the external and other audits that, for example, outsourcing provider would do as well. Yeah? So by that, I think there are multiple lines of defense to ensure that you comply with latest regulations.
I think we can move to the other section of the episode, which is the future of strategic outsourcing. Just an open question for both of you. What does the future of outsourcing in BFSI looks like? Where are we going to be like in a 5 years period?
So if I have to do the crystal ball gazing, right, Miguel, out here and think through where we will be in 5 years from now, I definitely see there's a strong role of outsourcing in financial services. Right? The core competencies of banks is going to be about how do I create platformized approaches to go after my customer segments and provide the product and experiences that they care about most, right? So if I look at commercial banks, we're talking about how do I create offering for each of the industry verticals that I go after: healthcare, travel, transportation, right, retail, a large conglomerates, right? How do I create offerings for them which aligns to their goals and vision, and how do I as a bank be that partner of choice for everything that they need for their financial security and business operations. And as banks become that, their core competency is going to be about the product design, the services design, the channel design, the platform that they use to drive that. So to make all of that happen, you need strong engineering capabilities, you need strong data capabilities, you need strong IT infrastructure and compute capabilities, you need to manage complex network and security, you need to manage complex processes. And you can't expect a bank or a insurance company or a capital market firms to build all of those capabilities internally. So what we believe is you're going to have a lot more complexity in the financial services environment, and it gets multiplied by the compliance effort on top of it, right? Because you have to play around with that. So that is where this is going to expand. So I see a significant amount of expansion of complexity and scale in the products, in the services, in the channels, and in the ways banks operate and serve their customers. They're going to have much more influence. They're going to grow much more bigger. And they're going to be a much more compliance that they need to manage with. So a lot of the core competency is going to be around that risk, product, process, experience, and everything else to do with is where outsourcing becomes very critical to augment what the banks are doing. The other piece that I believe is banks will want to take advantage of the global talent model and set up their own centers, right? So their own global capability centers or GICs, global in-house centers or captives. As they set that up, outsourcing suppliers will have to work with these captives as well as the enterprise entity together in a coordinated manner, because a bank or an insurance company may want to run a global product operating model, and they may have product teams sitting across the globe, and you would want the outsourcing team to augment them and work with them along the globe, along wherever the bank is, right? So working in lockstep with them is going to become very critical. And as you do a lot of that, we do believe this is going to be a market which is not just going to be about people led, it's going to be a people plus technology led model. So you would also see outsourcing being different because work that was requiring, say, 100 people today will require much lesser. But it's just that if you're doing, say, a work with 100 people and you may be doing it with 60 people in the future, it's just that that work will also increase 5x. So you'll still need more people, but the amount of work that we're kind of driving per person will increase dramatically given the productivity benefits of AI and other technologies that we see. So yeah, again, I'm very excited in terms of the opportunity out here, the growth out here, not just for outsourcing, but financial services and industry, right? Because it is taking off, right? It's taking over in a big way. So we do see a lot of activity out here.
What are your thoughts on this, Michael? If you had a magic ball and you can peek into the future?
I would love to have one, yeah, but I have not found where I can buy it. So if someone knows, please give me a ring, yeah. So no, joke aside. So perhaps summarizing, and I just fully can underline what Ronak said as well. Perhaps to summarize on three topics that I see there as well. So it gonna expand. So that I strongly believe as well. Secondly, it's more about strategic partnerships as we are looking from an end-to-end perspective. That's as well important, and as well what Ronak said, to jointly as a strategic partner, collaboration with internal teams, external teams, front office, middle office, whatever. So that there's a partnership, and that's a long-lasting journey to develop that. So that is, I think, the second part where I strongly believe that will grow. Not just I have someone who's crunching some crunchy numbers and then I save some costs. This will move downwards. And the third part, I think Ronak said as well, technology and process, they will meld together. So for me as well, it's about people, process, and technology. It's the mix. So you need to, if you look from an end-to-end perspective, you need to combine these three worlds. So as well for the outsourcing at BFSI in general, it's important that you not only look only at IT, because IT enables business. Business is there for our customers. So it's about the process. So you need to combine these forces, and as well important for the outsourcing provider to have a joint view on that. So these were the three things, I think, from my point of view as well.
I think we cannot talk about the future without also talking about the disruption of technologies like, for example, DeepSeek, which this past month has been shocking all the markets worldwide. With these models rapidly advancing, how do you see them disrupting the traditional sourcing models?
So I think, Miguel, one thing that something like DeepSeek does is it tells you that we can get to a lower cost of consumption on AI. I think that's the big challenge that we were facing, right? Everybody wants to infuse AI, specifically generative AI, as part of every work they do, but the cost was prohibitive. Now, there is a directional sense that yes, this is possible, or at least it will force everyone to think in that direction, is let's make this cheaper to consume, cheaper to build. And then obviously, if it's easy to build, easy to operate, easy to integrate, and it's also cost effective, then you will have more adoption. So we are already working on the parameters of let's make it easy to build, make it easy to integrate and easy to operate. That you are already doing, but the cost was prohibitive. So as we bring that down through more techniques, and I don't believe we're going to stop at what we've seen from DeepSeek. We're going to see a lot more of innovation in this market. So that is where we get excited about it, is as the cost goes down, you realize that yes, there is a potential play where you can now do the arbitrage that you get from outsourcing because of the people process tech that Michael talked about. Plus, if you add the power of AI agents to it, you can actually get a much more higher productivity. So the people process tech plus AI agents combination is the future of outsourcing as we think about it. And that's where will be interesting to see that you asked a question about how buying in outsourcing is changing. So contracting will become, oh, I'm buying, I have a contract which has 100 people and 300 bots, and you have to price for it, right? Because you're not pricing for 400 FTs, but you're pricing for 100 FTs and 300 agents. And how do you do that together? So that is where our research and point of view is developing towards. Yes, there's a lot more of uncertainty. We haven't seen all of it, so the point of view will keep developing, but that's where it becomes very exciting, right? Where the people plus bot model or a people plus agent model will take over a lot of these processes as we look at it.
Yeah, and from my point of view, the pricing probably will change more to the outcome. I think a little bit what we talked about as well. So you're not paying people, or I'm not paying 400 FTE, and then I'm paying for a service or an outcome. And independently, if there are then 2 FTEs and the bot, or 3 bots and a half FTE or whatever, I think at the end it's about the business value for the service you provide, and I think that's what we will see. And I think it will definitely, to your question, so it will definitely disrupt, I think. So you need to combine these new technologies in order to bring new services. I think the easy things, and you will not be efficient if you don't use these kind of new technologies as well, and as an outsourcing provider. So I think that's really crucial. And what we see as well, Ronak was talking about costs. I mean, if you look today, costs are really high. 30%, I think, of the POCs fail, either due to quality, due to lack of knowledge and staff, but as well due to cost, partially because you don't find a good business case due to the still high cost of these technologies, and they will come down. That's what Ronak said. That's what DeepSeek will, for example, bring a push. So competition is always good for price. So that's what we're going to see. And if it's going to be cheaper, we will see much more of these kind of new technologies used in servicing these processes. And then this will definitely change the BFSI segment, and as well the companies, how they work. So standardized tasks going to be automated even more, and you more and more use these resources then for coding, for prompting, and you need more and more, I think, a mix as well of business knowledge and technology knowledge. So you need a good prompter, but he needs to understand the business, and that's there, I think, where we're going to see change.
Perfect. I think we've reached the final question. I want to ask you the last question, which is, if you had to summarize quickly the biggest opportunity and the biggest challenge that BFSI companies face in outsourcing today, what would it be?
So for me, the biggest challenge is the rate at which technology and innovation is happening outside of the banks. We see a lot of change management activity that needs to happen, right? The change is across, business products, and again, the same conversation around sourcing, IT. A lot of folks have to align to a continuously evolving change, right? Banks and insurance firms and capital market firms like the stability of it. You've set up a process, let's keep running at it. What we are seeing out here is there's an external force of this technology which is expecting you to change and change really fast, as we spoke about the velocity of change. So I think the biggest challenge is going to be about how do you keep up, right, with everything going around you, and bringing the best of the innovation internally to help your customers and help your business grow better is going to be the big challenge. So this velocity of change for me is going to be the number one priority.
What about you, Michael?
Yeah, so a little bit differently phrased, but I think hitting exactly the same topic. I thought when you asked the question about it's not regulation or it's not technology, the biggest challenge in my eyes is transformation and change management. Process requirements will significantly change due to AI. We need to think end to end, what we talked about in this podcast. We need to come from a custom point of view, independently how the organization is currently built within departments, across silos. So splitting competencies, trusting on a partner, and as well getting or bringing in a new partner and trusting him on taking over some of crucial activities. I think all this mind change and process change, that's the biggest challenge from my point of view, in order to get it done. So it's a huge change for all involved employees, but as well for all stakeholders. So in my view, that change is the biggest challenge, and it needs to be handled. It's really a transformation that we're in. That needs to be seen as well from banks, but as well from respective providers or all involved stakeholders. So talking about challenges, it's a change, it's a transformation, but talking about opportunities, I think the biggest opportunity is definitely growth, rising customer satisfaction, and as well identifying new business and business opportunities with these things that are happening at the moment. So AI will transform the business. It's not technology alone that will do the trick, but it's a huge opportunity to open new markets, to grow, to outpace the competition. And in my view, it's at the end all about the right mix of people, process, and technology, and that's the big opportunity, I think. Ronak, your point of view as well?
Sure, I'm again happy to add, right? So, Michael, as I think about the biggest opportunity, I would agree with what you said, right? Which is how do I drive growth for the business and how do I align outsourcing initiatives to my growth objectives as I come back to my OKRs, right? So, hey, if we define the business OKRs, how are we aligning outsourcing to those same OKRs and measuring them on those outcomes is going to be the big opportunity that we see.
Thanks a lot. Well, we've explored how outsourcing is no longer just about cost reduction, but a powerful tool for driving innovation, compliance, and even improving, for sure, customer experience. So I would like to give you a big thank you for sharing your expertise and your insights. And that's the whole discussion today. So I will invite you to come back to another episode in the future because I'm really glad for your words today. Thank you.
Yeah. Thank you for having us.
Oh, indeed, it was really, really a pleasure as well in that joint group with Ron and Miguel. I think really, really nice. Yeah, and I hope it was as interesting for the audience and our listeners on the podcast as it was for us. Yeah, so really a pleasure being here. Thanks.
Thanks, Michael. So for all of you listening, thanks for tuning in into the Power of Possibility. Don't forget to subscribe on Spotify, Apple Podcasts, or Amazon Music so you'll never miss an episode. See you next time.
The Power of Possibility, a podcast from SPS.
Hi, everyone, and welcome back to The Power of Possibility, the podcast where we dig into smart, forward-thinking strategies to help businesses grow and stay ahead. So today we're looking at something that doesn't always get the spotlight, but plays a huge role in how companies operate, which is records management. And no, we're not just talking about files in boxes anymore. We'll get into why so many businesses are pushing toward digitization, what's driving that change, and what's getting in the way. Plus, how companies manage the mountain of digital content piling up every day and make sure they're not just holding on to digital trash that clutters their systems. We're also tackling big questions around compliance, hybrid work, and how AI and automation are changing the game. So, joining us, we have Siobhan King. She is the Senior Consultant at Metaxis. Hi, Siobhan, how are you?
Hi, I'm well, thank you.
And also we have Keith Zimmer. He's the Solution Director at SPS. How are you, Keith?
Very good, Miguel. Thank you.
So it's so nice to have you both here. So let's start with the basics. What do we mean by records management? I guess that this is much more than just files and boxes on a warehouse shelf, right?
Absolutely. So for me, records management is about having the governance and controls in place to ensure the integrity and the usability of your records and to make sure that you get the best value out of the assets that you have. I like to say that good records management is almost invisible, but bad records management is an obvious liability.
Okay, so what do you think? Are we seeing a move towards digitization, and what is driving that, and what are the barriers?
So yeah, for me, digitization is a means to an end. Really, it's a mechanism to try to get everything together into one format, because a lot of organizations are dealing with loads and loads of paper. And one of the big problems that you've got when you've got things in a paper format is that you can't access them. And I think that's something that became quite clear with the pandemic. So there's a need to digitize to make things much more accessible, and to be able to share things and to be able to access your information while being mobile. So it can be from any place, anywhere. But there's another aspect of wanting to digitize your records, as I said, which is that you kind of want to be able to manage everything in one place rather than having to come up with some kind of plan for how are you going to manage your paper and then another plan for how are you going to manage your digital records. Digitization provides the opportunity to kind of turn your paper records into digital records and ingest them into your digital systems that you use for managing your records and apply all of the same labels and all of the same rules to them so that they can then be easily found by your users and they're therefore considered at the same time as all of your digital records. And more importantly, you're able to apply your compliance controls to them in the same manner as well. And I think that's one of those things where the services that SPS offer is a really great way of dovetailing with the services that Metataxis offer. Is we're looking at it from a governance perspective, and SPS is looking at it from. I'm speaking on your behalf, Keith, but from an implementation point of view.
No, absolutely. I mean, I think, Miguel, there's a real move towards digitalization, and I think most of our clients now probably have digital strategies that are completely central and core to their agenda. So they're much more open to digital alternatives, to things like mail and print and records, as Siobhan says, than they would have been even 5 years ago, because all of that now plays into the digital experience for their own customers. I think what we saw during the COVID pandemic and 5 years ago and those office shutdowns is the customers who had a forward-thinking digital strategy, they coped so much better. And then they weren't the ones putting emergency measures and sticking plaster solutions in place. And they continue to do business in the usual way and then support their customers. So I think digitization is seen as central to business continuity now in a way that it possibly wasn't, even 5 years ago. But I think probably the biggest thing is that all of us as customers are much more digitally demanding than we've ever than we were. And then that gets kind of reflected by the legislation that comes through. So a couple of examples of that are things like the pension dashboards program. So there's real pressure on, for example, pension providers to standardize and cleanse their data to align with that program, which they've got a legal obligation to do. And it's obviously much easier to do that digitally than when you've got warehouses full of paper and tapes and microfiche, and those kind of traditional methods. I think another good example in the UK is the NHS, because they set themselves up with some really challenging targets. I think it was 90% of trusts needed to be kind of having digital patient records by this year. And then that meant a big push on implementing new systems and scanning and things. And I think once people get used to using things like the NHS app and being able to see things like their medical history in one place, right? And all of the benefits and the convenience that the kind of digital world gives you, then they're just much less accepting of analog systems and of paper systems and of disjointed systems.
Yeah, and I think the other thing the other part of your question that you asked, Miguel, that we haven't addressed is about the barriers to digitization. And I think for me, one of the biggest barriers is not understanding what you've got is a huge barrier, because honestly, going back to what you were saying, Keith, about Raiders of the Lost Ark and there being like warehouses and boxes of paper, you can't possibly digitize it all.
Yeah.
You need to be able to understand what you've got at offsite and what the usage patterns are, and what are the things that people are going to need most constantly, so you can start to set priorities. And if you don't understand what you've got in terms of the record types that you've got and the way the business is using them, then you're really going to struggle to start a digitization process. Or even, I know, Keith, you've got scan on demand. Even that is going to be a little bit hard for you to do. Yeah, and that's often the first step we take when we work with a lot of our clients on looking at their information governance or records management program, It often starts with a discovery exercise to understand the profile of what their records landscape looks like, as well as how is the business using records, and what are the business objectives and business needs and requirements that need to be addressed.
Both of you mentioned that the pandemics changed the perspective from the customers regarding digitization and records management. But I would like to know currently, today, are digital records given the same value as physical records under client's eyes?
Okay, I've got quite a strong opinion about this because I have to say that our clients either value or don't value their paper records or digital records equally. So if there's a problem, I tend to find with their paper records, then there's going to be a problem with the digital records. And I think the reason for that is because they're not looking at paper records and digital records as part of the whole ecosystem. They're kind of treating them as if they're completely different things. And that mentality means that there are a lot of things that fall between the cracks. And we find we've worked with a client where they're doing things like having born digital records and then printing them out and then putting them in boxes and then sending them to offsite storage. Things like that start to occur, and you start to identify, well, why are the people in the organization printing things out? It's because they don't understand how to use the digital record system. So there's a big governance gap there. So that's just one example of how when you don't think of it as a whole, you miss a lot of issues that you've got in both paper and digital records management.
Yeah, I think that's completely true. I think the format shouldn't really reflect the value. I think they're not really linked. But there are things that people can do in order to kind of level up, if you like, the value that they place on digital and physical records. And one example is getting certification to the British standard BS 10008 accreditation. So that's the standard for ensuring legal admissibility of electronically stored information. So that's a globally recognized standard, and that can go a long way in terms of building confidence in digital records. And a lot of people think things like BS 10008 are about the quality of the image, and it's about kind of how the clarity of the scan and the kind of metadata that you take with that. But it's not about that at all. It's really about the life cycle management of a digital record, being able to prove this is the best and most authentic version of that particular record, and that it's the only version, and having those controls in place. And if you take those steps and those measures and comply with accreditations like that, you can have just as much confidence in your digital records as your physical files. Now, some things will need to be physical. There are things like deeds and certain legal agreements and legal documents that need to be physical, but there's probably less that needs to be physical than people realize, and probably more options open to them kind of digitally than they realize.
And can I add to that so you talked about the digitization process and the digitization, the legal admissibility standard, but also there needs to be confidence in the record keeping systems that you're using for managing your digital records. And again, there are standards in place that you can use to ensure that your systems are robust and that you can trust the records that are kept within those systems. So it is about having things like audit trails, having clear permission set up within those systems, and ensuring the integrity of the records that are kept in the systems.
I would like to change a little bit the main topic here and reintroduce an idea that I mentioned in the description. Well, according to data from the Data Never Sleeps reports by Domo, a cloud solution company, in 2022, every minute of every day, almost 6 million Google searches were made, 66,000 photos were uploaded to Instagram, nearly 350,000 tweets were posted, and even 230 million emails were sent. It's what we call digital trash, which also affects companies for sure.
what about this issue? How a policy of save everything could become a problem, and how to solve that?
Okay. So I have to say, this is actually a really old problem and it's been around for a long time. I think the issue is that it is growing exponentially, particularly with the growth of AI, which requires yet more and more and more data to be accumulated. Um, and I have to agree with you that the idea of keeping everything is problematic. Um, it's it's not only problematic because of the cost, which is the obvious thing that we talk about in terms of service space, but it's also just very difficult for you to manage all of that information and actually get to the answers that you need to get to when you're just trying to do your job. If you've got so much basically noise and the information to noise ratio is just too much for your staff or your colleagues to deal with, then that's actually going to start to eat into their time and their efficiency at doing their job. I think it comes back to what we were talking about around when we were talking about the paper versus the digital and about understanding the value of the records that you have. And there's a value in terms of retention, in terms of some things like the deeds that we were talking about have long-term value. You need to keep certain records because they prove the rights that your organization has, or they prove that you have fulfilled legal obligations that you need to, or they are proving that you have met compliance regulations. But there are other records that are of very, very short-term value. But a lot of the kind of material that you were talking about in the data trash report is a lot of that ephemeral stuff, because it often relates to your marketing activities and other things like that, where you only really need to keep that sort of thing for a very short amount of time. And we actually have a term in records management for that, some of the stuff that you've got. We call it rot, which I quite like as an analogy for digital trash. And so rot is actually an acronym. It's R is for redundant, O is for obsolete, and T is for trivial. And the truth is that so much of the stuff that we're dealing with on a daily basis is actually rot. Having good governance in the form of having some form of retention policy in place can help you to then start to sift through and say, these are things we need to keep for a certain amount of time because we need to comply with our legal obligations or protect our rights. These are the things that we don't need to keep. And those retention rules, there's a piece about ensuring you know what they are, ensuring all of your people know what they are so that they can, say, manage their inboxes on a daily basis or their OneDrive. There's also a piece about integrating those rules into your digital systems where your records are kept. And that's the kind of thing that Metataxis works with a lot of our clients on, is in helping to, say, a common platform that a lot of people use is Microsoft. And Microsoft has a compliance tool called Purview, which allows you to develop retention labels, which you can then automatically apply if you've got your classification and categorization of records set up well to the information that you've got in SharePoint, in OneDrive, and even in Outlook. So I think having a regular and routine disposal program in place to help you get rid of all of that rot can really help you partly address the cost, but also address that digital overload problem that you might have.
I think also one of the things that led to the growth of digital trash and that kind of things getting out of hand is cloud storage. I think people say it's in the cloud and it's almost like a license to save everything. But as we all know, there's a physical reality behind the cloud. I think data center energy usage will double in the next couple of years. according to most research. And as Siobhan says, then once you bring AI into the mix and you start applying that to everything you've got, it's just the demands for energy, for storage, for cooling, they're going to get out of hand quite quickly. So companies absolutely need to be able to control their electronic files and be able to review and delete them when the time comes. I think part of the problem, or part of this, was caused by putting temporary digital processes in place. And I think, like, just to reference COVID again, but I think poor digital practices probably peaked during that time, because I think access took precedence over process, and there was a little bit of short-term thinking. So instead of having things like a proper digital mail software, or a proper electronic document management system, people started scanning and attaching PDFs to emails, and then suddenly everything's uncontrolled and there's multiple versions of the same thing. And then local storage, cloud storage, no control over authenticity, no ability to be able to prove that you're actually compliant with things like GDPR and you are deleting things when you should, because who knows how many other versions there are of the same files. And I think we're probably a little better at stopping the physical trash, even though I still think there's probably how many thousands of boxes of shoes, tennis rackets, brochures from the 1980s, that are sat in boxes that people are paying storage for month after month. But I think, we need to kind of have a real mindset change and be just as strict when it comes to the digital trash.
Regarding the obligations on this topic, I mean, the compliance. What about compliance? How can businesses balance compliance with operational efficiencies?
So, I mean, I think it's probably obvious what I think about this is that often compliance is pitted against operational efficiency as if it's a zero-sum game and you can only have one winner. But really, I don't think that's completely fair. I think often records management and information governance doesn't just help you address your compliance needs. It can also improve your business efficiency. So we're talking about some examples before around the impact of having digital overload has on your colleagues and staff when they're trying to work on a daily basis. I think that there's an opportunity for records and information governance to improve the efficiency and the streamline your processes and get them down to what the bare minimum is that you need to be able to comply, but also to be able to work effectively. And I think that sort of thing actually improves people's daily lives because it's less time sifting through loads and loads of information to try to find the one insight that you're hoping is the right thing, or to have confidence in the decisions that you're making as a business. Because what if you're basing that on old data or old information that is no longer relevant? Like the versions, Keith, you're talking about. What if you've picked up the wrong document and you're using different versions? And so when we work with clients, we get called in. Sometimes their focus is compliance, and they're saying we want to improve our information governance so that we can improve our accountability. And along the way, we find improvements to their processes. Sometimes we're asked to look at things around their information architecture, which is a fancy way of saying how do they structure their information. And as we're going, we address compliance. So it's never really a one thing or the other for us when we're working with clients. We tend to be looking at the two things at the same time.
Okay. I have another question regarding, at the end, we are always coming back to the pandemics. But at the end, is the situation has changed dramatically. I mean, there are a lot of people working from home, different workplace environments, etc. And I would like to know from the records management perspective,
how are these new trends, these workplace trends such as hybrid working, etc., how are they impacting on the records management space?
So, to go back to what Keith was saying earlier about the pandemic, about that rush to address the immediate problem, that is exactly what we saw, particularly with the adoption of Microsoft Teams, which a lot of organizations saw as their answer to an online collaborative platform that allows you to have meetings and keep records and do all sorts of things. And in that rush, yeah, Keith, you're absolutely right. People were concerned about getting the VPN set up and making sure that the security was right and the permissions were right and that everybody could access it and that Teams was working. They didn't really think about how they were going to structure the Teams sites. And we've seen quite a bit of sprawl in this area. Like people have got mountains of team sites all over the place, not really clear on what their purpose is and what, who should be involved. We're hearing our clients, staff complaining that they've got hundreds of teams that they're members of and they don't know what why they're there. So it really is a lack of information governance that we're seeing in a records management and information governance space. Now that that's kind of been happening for a couple of years, people are starting to come to us to ask, how do we rein this in and how do we manage this better? So there's a lot of remediation that needs to happen of how do we deal with all of this stuff that you've got in the old environment, which was developed in a rather uncontrolled and organic kind of way. And how do we develop maybe a target operating model for you to be able to move to, which is much more structured and much more easy and simple to follow. So yeah, definitely sprawl is one of the things that we've seen. But I do also think I'm thinking of at least one client where the transition from paper to digital was quite abrupt. And they're still struggling with how do we deal with the fact that people were working from home during the pandemic, and there's this post-custodial thing where the organization's paper records are now sitting in people's homes. And it's around, again, governance and making sure that there are clear guidelines for your people around what you should be doing with any paper that you had from before the pandemic, but also providing solutions to your people about, so I've got these boxes, what should I be doing with them, and making it clear to them this is a process. And yeah, Keith, digitization is part of that in terms of having a clear digitization process and ensuring that that is well managed.
Absolutely.
As part of it.
I think that's true. I think also with hybrid working, there's a kind of a real estate angle to it. I think people are in the office less often, companies need less space, and now a few years down the line, as kind of lease break opportunities roll around, with so many of our clients are undertaking some big real estate projects. So they're either moving, and typically moving means kind of downsizing, or they're kind of subletting floors and they're refurbishing. And I think the research that's out there from people like Leaseman and JLL show that nearly half of firms globally are going to reduce their space over the next few years. So this is a trend that isn't a temporary thing. And I think the net result for that, for kind of those of us in the service industry, is that the space for services and the space for storage is very low priority in the new building plan, if you know what I mean. So anything that we can do around digitization or doing things offsite going to massively help to kind of help people to realize this kind of smaller office footprint world. And I think the second thing is, as Siobhan's just said, people are working from home and they're used to being able to just call a box of files back from an on-site store or from a warehouse. But then once things are going to people's houses, that's a different scenario from a kind of a cost of courier point of view. And then also the sort of data security issues you get of having people with sensitive client files and the like, around the house. So I think that's led to a demand, both a demand for and then an acceptance of digital records. So we're seeing things like scan on demand, as Siobhan said, is becoming maybe the norm, in the hybrid world, or certainly as common as kind of the traditional box retrievals that we were seeing.
I think it is fair to say at this point of the conversation of the episode that information governance has become a critical focus for businesses today. But it will be great to have to know what are the essential principles that organizations should follow to ensure that the data is secure and accessible and for sure properly managed.
I see this as a people issue as much as a technology issue. So there has been a tendency in the past to think of, records management as, oh, we'll just get a bit of kit and that will do all the management for us. But really, you need to have your governance in place, and that needs to be integrated from C-suite level right down to the people who are doing the operational side of things. And accountability is absolutely key. There's no point in having a whole load of policies and controls in place for your security and for your retention if there's no one to check up to make sure that it's being done. So for me, that accountability of information governance is very important. It's the area that we see where information governance programs are not performing or even failing. It tends to be because there's a lack of accountability, there's no monitoring, there's no reporting. And I've got one more thing to say as well, is when you have an information governance program in place, it's important to get that balance of roles right. So you need to make things happen. You need to have a group of people who are responsible for making decisions. And they need to make those decisions in a timely manner. And they need to, again, be accountable to someone ultimately at the top at C-suite level. And then underneath that, you need to have a group of people who are responsible for making things happen, for ensuring that the operations are working. If you lack either one of those things, nothing's going to happen. And I'm going to sort of speak for Keith again and say, I think that's where SPS and Metataxis actually dovetail nicely, because Metataxis is looking at the governance perspective and looking at that decision-making perspective of things, whereas I feel like SPS works much more on the implementation level and making sure that the operations are in line with expectations. But yeah, I'll let you speak now, Keith.
Yeah. No, I think what you said about accountability is key to it. I think if you as a client have got responsibility for records management, I think you're responsible for the systems you bring into place. You're responsible for making sure that all of those records support the core function of the business. You're responsible for the services, whether that's offsite providers or outsourced teams on site or wherever it might be. But most of all, as Siobhan said, you're responsible for the accountability and the responsibility. You can have the best policies and procedures in the world, but if people don't know where they are, don't access them, don't use them, then they're kind of meaningless. So it does all come down to the kind of accountability and making sure that all of that is front of mind. I think another good approach there is if you start with the risk and have a really good risk assessment process. So if you're looking at your whether that's risk of theft or loss or unauthorized access or inaccuracies of information or data transfer risks or information security risk, if you kind of start from there and then you mitigate and think, okay, what is the risk here? How can we mitigate it? What is the process? Does the process support that? Kind of working almost from a worst case scenario kind of backwards can be a kind of certainly a robust approach in terms of making sure that you don't have problems down the line.
Okay, well, at this point, we're just coming to the final question, which is looking ahead. How do you see the future of information management evolving, especially with the growing reliance of AI and automation in data processing?
So AI, I think, is quite promising, both for our colleagues who are using records on a daily basis, but also for the practitioners. because we've talked about our digital trash and rot and the fact that we've got these growing numbers of information and records that we need to be able to categorize, and so that we can apply controls to them, ensure they're secure and it retains the right amount of time. But there's just so much of it. And there's no way one human being or even a team of human beings, believe me, I've tried, can review all of that stuff. And that's where AI has the promise to maybe help us out and break the back of some of that hard work around at least doing maybe a first level, second level sift to be able to identify what is this, and therefore what is the value of it? Can we get rid of it? There is, of course, a need. I've mentioned it as a sift, so I think there's going to be a human element to say, okay, we'll look at the results of the sift and say, right, okay, this is the decision that we need to make for this, or this is the decision that we need to make for that. But, I think that there's promise for AI to potentially help us as records managers to deal with all of this, rot that we have to analyze in some way.
Absolutely. I think Miguel, we're seeing our customers already using things like advanced data analytics to run retention and destruction reports. So that these things used to take days and days and manual lookups and cross-referencing, and these things can now be done in minutes, and then customers are able to confidently dispose and stop paying for materials at the earliest possible time. But I think for me, the main change from AI, and it's kind of mainly what Siobhan spoke about, is around accessibility and then information retrieval. But when you think about all of the data that you have in a record repository and how most of that is completely unstructured, right? The ability to intelligently search through that content, use context and nuance, and bring in those extra prompts and rules that Siobhan was talking about, understand different terminology, that changes everything. But it needs to be digital, right? You can't throw all of this AI kind of at a warehouse full of boxes. And whereas when we talked about barriers earlier, and a big barrier will always be cost, right? And often the cost of a huge discovery and a scanning project versus long-term storage, often the balance isn't where it needs to be for people to kind of take the decision to do that. But actually, I think it might be that the value of that data that you can unlock through AI, suddenly that's a game changer in terms of the return of investment. And I think in the next couple of years, I think we're going to see that start to trigger digitization projects, probably at a scale that we haven't seen before.
Okay. Perfect. Well, that's a wrap for today's episode. Huge thanks to Siobhan and Keith for being with us and breaking down what records management really looks like in today's world. Thank you.
Thanks, Miguel.
Thank you.
So we've covered a lot: digitization, digital clutter, compliance, and how AI is changing the game. Hopefully it gave our listeners a lot of some fresh ideas on how to approach information management in their own organization. So if you liked what you've heard, hit follow on Spotify so you don't miss the next one, and maybe share it with someone who would find it useful too. So thanks for tuning in, and we'll see you next time of The Power of Possibility.
The Power of Possibility, a podcast from SPS.
We all know about it, but it's really surprising to see how much AI is transforming industries, especially healthcare. What if AI could predict cancer recurrence or help doctors make personalized treatment plans in real time? Today, 2 out of 3 physicians are using AI in their practice, a 78% increase from just last year. In fact, 64% of healthcare executives say AI is already delivering a positive return on investment. In this episode, we will listen to specific use cases from scientists and specialists working hand in hand with AI to change the future of healthcare. Welcome to the Power of Possibility. So today we begin with Dr. Jack Gilbert, professor of microbial oceanography at Scripps Institution of Oceanography, who also holds a position in the Department of Pediatrics at the University of California, San Diego. He is the co-founder of the Earth Microbiome Project, the American Gut Project, and was featured in the popular recent Netflix documentary Hack Your Health. Also, Dr. Gilbert is the co-founder of BiomeSense, a company focused on microbiome research using AI and other technologies to improve health outcomes. Thank you for being here, Jack.
My pleasure. Thank you very much for inviting me.
So, I would like to start with BiomeSense. You are the co-founder of BiomeSense. Can you tell me how AI is playing a key role in this project?
Well, AI is playing a key role in the implementation of microbial technologies into biomedical sciences and clinical application quite broadly, right? AI is a very, very large umbrella term for describing a whole suite of technological innovations that allow us to handle large data sets, complex interacting data layers, to enable us to identify strategies that can optimize outcomes for various modalities, right? So we use this in many different layers. Yeah, BiomeSense is a company explicitly designed around creating longitudinal data. That means time series. So we collect every single poop from a single person that they deliver, every bowel movement they deliver over a period of months. And then we combine that data layer, that very, very dense longitudinal observation of the microbial community in that individual, with everything from their heart rate to fMRI results, so brain analysis, to their metabolic output, to their blood chemistry, diets, habits, exercise regimen, sleeping, everything you can imagine. And then we're looking for trends, using AI to look for trends, intersecting modalities between the different data layers that can be used to predict particular outcomes. So, for example, you can imagine if we were looking at individuals who were going through breast cancer treatment. So they've been diagnosed with a breast tumor, and they have to go through a series of treatment steps, right? So first a lumpectomy to remove, a surgical procedure to remove the breast tumor. And then usually for women, they will also go through a egg harvesting stage after surgery. So we'll artificially induce egg production and then harvest the eggs because then they have to go through chemotherapy to remove any traces of the cancer and prevent recurrence downstream. So that's a very, very dense and quite intense treatment process, right? And we want to understand over time how the different features of that woman, how her metabolism, her neurological processes, her endocrine processes, her hormones, and her microbiome, how all of these intersect with her lifestyle to either facilitate beneficial outcomes from each of those steps or lead to detrimental outcomes. And obviously the worst outcome is a recurrence of the cancer. And so we're using these dense longitudinal observations over time and AI to allow us to identify intersections over time between the data layers to predict the likelihood of recurrence, to predict the outcome of egg harvesting, like if it's going to work, to ensure that we can better understand the type of chemotherapy that a woman will tolerate and what the likelihood is that she will have a negative outcome associated with that. So we're using AI and microbiome layers to add in to the dense, complicated series of clinical data that are currently available so that we can better treat people, we can better understand their outcomes.
So I guess, as you mentioned, AI is central to your research process, right?
Absolutely. It's, we use AI modeling applications to rapidly accelerate clinical adoption of current technology. So you can imagine microbial community scale metabolic modeling. So this is where we take a microbiome data set where we look at all the different species that are present in your poop, and we try and recreate the metabolic interactions between those species. So who's feeding off of whose products, and what does that mean for their growth or their decrease in abundance? And so using this, we can predict metabolic phenotypes for the whole microbial community and use that to identify, say, an ability to increase the prediction of short-chain fatty acid. So what food should Miguel eat or Jack eat in order to facilitate an increase in the production of beneficial compounds like short-chain fatty acids by our microbiomes? And so that can allow individualized dietary recommendations based exclusively on our fundamental understanding of how microbial metabolism exerts itself in the intestine. Yeah, as another great example.
In your opinion, where do you see the greatest long-term impact of AI in healthcare or biomedical science?
Okay, I got a couple of examples where I see this, right? So one of the first ones is the use of large language models. So ChatGPT is a great example of a large language model. How do we use these? Well, number one, we can use large language models to enable better communication. So we trialed a use of a large language model here at University of California, San Diego, where we allowed, we randomized doctors to either use a large language model to reply to their patients in the chat, in the chat function on our health apps that we use to communicate with patients, or to just use their normal communication skills via email or these things. The patients that received ChatGPT, well, it wasn't a ChatGPT, but large language model responses from their doctors felt that they were more listened to, felt that they were getting better information, felt that they trusted their doctor more, felt that they were being supported more by the healthcare system. So we're using ChatGPT to take people who are extremely busy, or large language models take people who are extremely busy and often not necessarily well selected for their ability to rapidly communicate with patients, and provide them with a tool which can facilitate better communication with patients. And I think people, when they're scared, they want good communication. And this leads to a second piece. We're using large language models as resources to facilitate coding and improving bioinformatic workflow tools that specialize in microbiome analysis. But we're also using it to create two front ends to our data ecosystem. So the AI can help to facilitate the machine that analyzes all the data from a patient's chart, from a patient's analytical framework, their microbiome, their blood pressure, their blood chemistry, et cetera, et cetera. We can use that machine, process all that data with AI and large language models, for example. But we could also place GUIs, graphical user interface style levels on the outside of that, so that a patient can ask simple questions via an app of their own data and place that data in a larger data and knowledge ecosystem that enables them to say, ask the questions that they feel too embarrassed or they feel are inappropriate for them to ask their doctor, or their doctor's too busy or asleep. And imagine this situation: you get a cancer diagnosis. I hope that's never happened to you. It's happened to me and my family. Trust me, you're awake at 3 o'clock in the morning that night, asking Google what it is that this is, what it means, and you can go down some very, very dark holes very, very quickly, because the information being provided is not very accessible, or is scary, or is overbalanced with very negative outcome stories and not enough positive stories, or just wrong information. So imagine if we were to give you an app, your doctor gave you an app and said, instead of using Google, I'd really like you to use this app. This app has been trained on all of the available scientific data, and I can guarantee you this this app will give you the best answers. It's the answers I would give if I had the time and I was awake at 3 o'clock in the morning. So use this app to answer your questions. But there's the orthologous is also true. Doctors need to be able to interpret and interact with data. They rely very, very, very heavily on their training, right, to interpret an fMRI image or to understand the different levels for different blood chemistry markers, right? They have a lot of training in that. It's great. But imagine being able to ask us a clinically relevant question of a much broader data set to say, in my experience, these features I see in my patient should be interpreted as X, Y, Z, as as a cancer outcome, or they are suffering from type 2 diabetes. What other disease outcomes could these markers be predicting based upon the available literature? So that's where it becomes really exciting. A patient can interact with their own data via a large language model, but so can the clinicians, because the clinicians are still not experts in everything. And one clinician cannot be an expert for all diseases. It just doesn't work. But we can use AI to help facilitate that kind of capability. And using classification, regression tasks, attention models, and even transformer models, we can really start to dig down into creating machine learning models such as random forest or vector machines, right, which are standard workhorses in our system, to train data sets that could delve down and build out things like digital twins, so that I could create a digital twin of Miguel and use that digital twin to test out different treatment scenarios, right, based upon all your available data, and find out which treatment scenario is most likely to best work for you within a predicted outcome barrier to use to predict counterfactual scenarios such as dietary response, right? What diet should you be eating while you are consuming, or while you're taking your medicine, right? And so these features can be incredibly powerful in helping us to drive home the value of using these very powerful AI tools to facilitate outcomes such as treatment and response variables.
I guess that we all know AI has its limitations, like hallucinations. What lessons have you learned about its practical challenges, and how do you see them being addressed in the future?
Yeah, hallucinations are a real issue, especially in large language models. We can reduce that by only enabling underlying data frameworks to facilitate statistical outcomes. What I mean by that is, a large language model hallucinates because it's trying to take text, which is a hallucination of the person who wrote it, and combine it with other pieces of text and use that to predict more text, right? But when you're using statistics, which AI can facilitate if trained appropriately, to interpret data, literally ones and zeros associated with defined quantifiable metrics, then you can get a much stronger, more effective outcome, which has limits, right? You can't hallucinate beyond math. Math is hard to hallucinate in because it has defined boundaries. And I'm sure there's mathematicians who might disagree with that, but for the bog standard clinical microbiome and biomedical scientists like myself, we have limits. So we can use AI to test that hypothesis within those limits. For also by defining the boundaries of the data layers that a system can use, we can more effectively train an AI to be more likely to provide a result that is correct. What I mean by that is, a lot of the hallucinations that the system will see is by taking a manuscript from the internet, right? and trying to interpret how the text and the information in the figures, what it was meant to say, right? And remember, it's not using its deep knowledge of this environment to do it. It's just trying to pull information and compare it to other data sets. So it's almost trying to learn instantaneously what this information might be. So we can take the data layers and make them more AI ready, even for large language models, right? We can provide that large language model with a data layer which reduces the likelihood of that hallucination. So for microbiome data, we're doing this by improving not just the density of observations of the microbiome, so we can see what's happening up and down, in terms of changes over time, but also making it quantifiable. So instead of having a percentage of a particular bacterial species in the body, we're now leveraging the abundance of a bacterial species or a function as cellular units per gram of feces, right? So you can say for Caelobacterium peninsulae, you may have 12.3 billion cells per gram of feces, right? That's now a quantifiable metric, which is comparable across very, very large data sets, right? If they're all quantifiable. So by revolutionizing how we analyze the microbiome data and making it much more similar to blood chemistry results, which are quantifiable, or fMRI, CAT scan results, which are quantifiable, we can place these data layers in a comparable, quantifiable metric, which significantly reduces the likelihood that an AI can misinterpret an outcome based upon some kind of level of hallucination. Obviously, I'm skipping over a vast array of potential implications there. But, the other major concern of ours is the ethical consideration of this, right? Everybody in our study here, where we're using large language models to improve clinician communication with patients, the patients knew if they were being communicated with, they knew the likelihood the possibility was that they would be communicated with a large language model. They were aware of the paradigm of the trial they were in, right? They had to sign off on it because that's an ethical need. But as we move into the rapid adoption of these technologies, when you are very vulnerable, when you're a patient and you are putting your life in the hands of a surgeon or potentially now a surgical robot, right? Your human trust level has to be commensurable with the level and ability of that technology, right? And quite honestly, even if a robot or an AI system might do a better job than a human, we're much more likely, due to our social genetic evolutionary programming, to trust the human, even if the human would do it worse, right? So that's a really important piece to understand, that humans are ostensibly fallible, but we are genetically and evolutionary programmed to trust humans over robots. So it's we're working in an ethical framework whereby we need to be able to keep humanity in the system in order so that in a clinical setting we can have more effective support networks.
So one last question, Jack. What's the most promising AI application in healthcare research you've seen this year?
Well, it's a very big question because there's AI in settings that are available now, right? And as in the clinical setting, and then there's AI in the research space that isn't quite ready for implementation yet. So I'll take the first one first. I mean, I mentioned the likelihood that we would be able to use AI to increase the financial efficiency of a hospital setting, and that's how the setting is used, to how charging is made, to ensuring more effective and supportive turnover of our patient populations, to make sure that we reduce the risks to patients while optimizing the financial sustainability of a setting, right? And that is already being used to varying degrees, right? The people tend to use it effectively in some settings, not effectively in others, and some groups are less likely to adopt it. But there are many consultancy groups out there that are now working with hospitals to implement these technologies and to test them out and demonstrate their effectiveness. So I'm very confident that within 5 years, most hospital settings, especially in the US, will be leveraging some kind of optimization software to ensure that their financial sustainability and efficiency is being is at the heart of the operations of the organization. The chief financial officers and chief technology officers are working very closely to facilitate that, right? And it's an important piece of creating sustainable healthcare systems. The other piece being used already is in image detection and analysis. So, using AI frameworks to improve the likelihood that a CT scan or an MRI scan can be reliably detected, right? But they're still being very well scrutinized. The results, the outcome of those AI models are being well scrutinized by doctors and technicians to ensure the significant reduction in the likelihood of a false negative. Because a false positive's okay, right? We think there's something there. Okay, we'll run it through another couple of scans. Okay, actually, it's not true. You're fine. Sorry for the scare. A false negative's potentially life-threatening. The AI did not detect a brain tumor. You actually have a glioblastoma. This is a major problem. I'm very sorry. We waited 6 months, and now you don't want false negatives, right? So you want to make sure that if anything, the AI system is being a little bit over eager in its prediction, and that's an important piece of this. But those technologies are being implemented. They are being adopted at a level which is quite effective. On the research front, it's a lot more in the AI system, as I said, everything from improving our bioinformatic workflows and the AI platforms that we employ at BioSense, for example, are a very explicit example of that, all the way through to improving the annotation structure and making sure things are more accurate in the microbiome space. But for patient care, a lot of it's in predicting the ability to optimize healthcare outcomes in an individual in the research setting. So everything from being able to accurately predict the diet that an individual should use in order to achieve a particular physiological outcome. So should you eat blueberries, right? When should you eat blueberries? At what concentration of blueberries should you eat? And can we optimize that for your physiology? Can we test that in your digital twin, for example? So these processes are very exciting. And one of my close colleagues, who's also one of my ex-graduate students, Sean Gibbons, is at the forefront of developing some of these technologies. Other leaders in this field are Rob Knight here at UCSD, Curtis Huttenhauer over at Harvard, and people like Gerdan Segal at the Weizmann Institute in Israel, who are really putting at the frontier of using some of these technologies to predict how these systems work effectively to support health and outcare, health and optimization of health in our research populations. But again, still in research space.
Okay, thanks a lot, Jack, for your collaboration, and congratulations for your work.
My pleasure. Thank you very much.
Today we also have Serafin Babler. He's the head of BPS operations for Continental Europe at SPS. Thanks, Serafin, for being here today.
Hello, and thank you for having me on the show.
So, Serafin, we've seen the use of AI in the research process, but we are hearing more and more about a big revolution coming regarding information flows in healthcare, right?
Yes, absolutely. So what we see right now in the field is a real AI healthcare invisible revolution. Let me start with a picture. We often see AI as invisible robots, maybe in healthcare performing surgery or doing models detection on clinical stuff like tumors. But beneath all that, there is a quieter, equally powerful transformation happening right now, and SPS is part of that game. The revolution is in how information flows in healthcare. We think in healthcare of vast volumes of documents going back and forth between providers, insurers, patients. This can be forms, referrals, cost claims, medical reports, lab results, you name it. And most of that data or documents are unstructured. Much of it is still paper-based or buried in various PDF forms. This is where AI can unlock a huge potential. AI's strengths, in our views, is the ability to capture, classify, and extract data from these formats, turning all these documents into actionable information. With AI, not just faster, but if you do it right, more reliable, and in any case, much more scalable and time and resource independent.
Okay, and from your point of view, from your perspective, where do you see AI having the most immediate operational impact?
Yeah, great question. Immediately, and what I, as a private person, sometimes a patient of healthcare institutes, see is a huge potential in this whole inbound, outbound communication that but the various institutions in healthcare have. So the communication with each other based on documents. A healthcare institution, and I'm pretty sure about that, is flooded by emails every day, by scanned documents that they receive or provide, postal letters with all documents that I mentioned before. And they need efficient triaging. So this means, that it reaches the person who needs to do something about it, and they need interpretation, and that you can follow up with the surgery or with the treatment. So this is where we see an immediate potential to help patients to get their treatment faster and with less communication back and forth. These aren't the glamorous robots that I mentioned earlier doing surgery. No, they are more like the background AI applications, but they are, in our point of view, as mission critical as surgery robots. AI can reliably analyze these documents that, for example, I send to a healthcare institution to get treatment, more or less in real time. This is when I send them in, they can be classified automatically. And if you do it right, even prioritized, that the highest priority pop up in the to-do lists at the respective point. By using AI in this field, we are absolutely sure that we are saving a huge amount of hours and manual work of healthcare professionals every day.
Mm-hmm. We all know that there are many processes that AI could improve, increasing productivity or changing how we do things. But which processes in the healthcare sector do you think benefit the most from AI-driven transformation?
Yeah. So we had a look at the volumes per process type, and of course also where an immediate potential is in automation. And we came up with, also in talks to our customers, with the following list of processes where we believe the AI potential is quite handy and available. So first of all, in the claims handling. As a claims means there is more or less an invoice that needs to be paid out. So this is a high volume process which follows certain rules, certain business rules. And by automating the business rules, we see that you can come sooner and more reliably to a successful claim handling. Then the whole referral management is something which takes up a lot of time of healthcare professionals. And by automating that, we can free up these resources to talk to actual person and less being buried in paperwork. Same thing with medical report indexing. there is a huge potential of making the indexing more precise and therefore being able to free up time from the medical experts to actually look at the report and not look for them. And the healthcare industry is also a spider web of contracts. So by having a proper contract lifecycle management supported by AI, we absolutely believe and see in a few cases that this can increase the efficiency of the whole healthcare ecosystem.
Okay. Well, as far as I know, you are working also with health insurers in projects like, for example, Sanitas. What key learnings can you share from these kind of projects?
Yeah, that was for me personally a very interesting project because just right after I joined the SPS, we had this great opportunity to help this Swiss healthcare insurance company Sanitas on their inbound document management. And one of the success factors was clearly that it was from the beginning in the integration project a collaboration between Sanitas as our client and ourselves. The aim and what we achieved is to automate the entire inbound document flow for this insurance company. And as you can imagine, that's paper being sent as letters, but also email, uploads through portals, etc. And the challenge at this point in time was that the extraction, classification, and follow-up processes, they were not the same for all inbound channels. So make an example, when an information arrives via letter, it took this way, it got extracted to this level. And when it came through another channel, it went through another way. So what we achieved in this process is that however any information reaches Sanitas, whether it be by letter or via email, it follows the same classification and extraction steps. That allows for very much lean and efficient back office processes because you don't have to care whether it was a letter or whether it was an email. And that was basically possible because we didn't just automate what we saw. We really first set and simplified the whole process steps before we actually went to the implementation phase with IT and our business analysts. So we really looked at the situation and re-engineered the processes together with Sanitas. We redefined the categories, streamlined the case types across these inbound channels, and let AI take over the repetitive work. However, AI is used to do this job. Another insight is really important. This whole human in the loop design was critical to meet the level of quality that is necessary to process the information at Sanitas in their processes which come after our extraction. We guarantee typically 99% plus correct results. And this is, in this case, even after a lot of improvements, still a combination of the right artificial intelligence together with the human in the loop for manual corrections and quality control.
Okay, I guess applying this is always more effective with a list of advices or key strategies. What should healthcare leaders consider before starting an AI journey?
Yeah, choose field or business case which is, I would say, small enough that one can manage it with a reasonable team, but choose it strategically. Also, I make an example for a health insurance factory that would probably be, as I mentioned, the claims. process. Also choose an area which is, so to say, painful enough that it has the visibility within the company and also the importance. And second, choose your outsourcing technical landscape in a way that it fits well with your own core systems. Choose a partner which has proven interfaces to the common core systems to make sure that at this interface the data is imported, exported correctly. And third, speak with your outsourcing partner, for example, SPS, about success metrics. What is really important for a successful collaboration at the end of the day? Is it a saving that you would like to achieve? And if so, in which area should the saving be visible and measurable? Is it the turnaround time that you would like to improve, for example, on specific document flows? And if yes, on which? Or is it that you would like to improve your customer satisfaction? And having a defined success metrics helps not only to streamline the outsourcing partner like SPS with your own goals, but also to communicate the AI project well internally and externally.
I also asked Jack this question, and it's great to compare overall thoughts on AI opportunities for the future. Where do you see the biggest current opportunity with Gen AI?
Yeah, generative AI with ChatGPT, but all these other large language models, which have evolved tremendously only within the last couple of months, is very powerful when it comes to summarization and or interpretation of whole documents. I spoke before a little bit about extraction and shaping data, etc. But generative AI with large language models can add a whole nother level to process improvements with AI. Imagine with generative AI compared to classical AI, a tool that reads multiple reports with various pages and gives then an operational summary of it or an answer to certain questions which have been prompted, or even can create draft responses to customers in natural language and in every language, because next to the topics that I just mentioned, generative AI, I think, has also improved translations a lot from English to any language and vice versa. Is really a huge step forward with generative AI. So we are already at SPS testing because we're super interested those capabilities with partners, but especially when you share critical data, it's super important that it's in a controlled, supervised way, because generative AI with large language models, they always have a feedback. They always have an answer to the question. And we believe the human in the loop for quality control, together with the new power of generative AI, is the industrialized way how it can add value to healthcare processes, etc. So with specialized AI, not general purpose chatbots, we will win in regulated fields like healthcare, considering there is special needs for controlled and supervised ways.
Okay, that was the last question for today. Thanks a lot, Serafin, for being here.
Yeah, thanks again for having me.
And thank you all for listening to this episode. I invite you to subscribe to our podcast if you haven't already, so you'll be informed about upcoming episodes. Remember, you can listen to us on Spotify, Amazon, and Apple. Thanks again, and see you in the next episode.